Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacroix here in London, and here are your top stories. China steps in to support stocks and pledges to back overseas listings, while the Hang Seng Tech Index jumps the most on record. Bracing for Fed Day, markets prepare for the first rate hike since 2018 as Russia's war in Ukraine continues to add a lot of uncertainty. Plus, nickel is back. Trading resumes in just a few seconds from now, a week after the LME stepped in to diffuse a runaway short squeeze. So let's get straight to the futures. It's going to be an extremely interesting day when it comes to the markets. I'm looking forward to see, actually, first of all, how the LME opens, but also a lot of support coming in from China. China, in one day, actually announced 5 things that investors were worrying about. That not only is supporting China stocks, with Tencent, for example, gaining some 20%, similar gain for Alibaba, it's actually supporting the broader markets also in Europe. So let's see how things settle in. Again, commodities, and I really want to see where nickel ends up after the crazy 2 weeks we've had, the short squeeze, him saying actually he continues wants to short squeeze it, and of course a lot of the banks having to get out. Now in question is what happens to the LME in the future if something else happens like this. Now the IBEX just opening up, getting some 1.8%. The FTSE gaining 0.9%. Of course, the focus today is on the Fed. I have to say, because it has been so well flagged, and the Fed really primed the markets for its first rate increase in the current cycle, traders seem to be well positioned. I don't know whether we get surprised or not, but for the moment, you can see treasuries pretty much stable. Then China's stunning equities rally. Again, it's amazing to look at what happened in the last 7 to 8 hours. A lot of people saying this is whatever it takes moment for China. A couple of other things that we need to watch out. For example, euro. So I had euro there, 109.61. Euro, facing the twin risks event of the Russian debt troubles and the FOMC decision. So watch out for euro sterling and euro dollar. The FTSE MIB over in Italy opening some 2.2%. So let's see if we have nickel. I think we'll have it in just a second. And then, of course, equity, some of the futures there pretty much replicating what we're seeing when some of these indices are open. So let's go to the cross asset. I think that's when we see nickel, and we'll have a good sense of where it opens. So nickel, as expected, down. We were expecting it, or a lot of analysts we spoke to were expecting it to go down. 43,995. Will be interesting to see where we are in 2 days from now. S&P futures over in the U.S. also gaining some 0.8%. You can see the Hang Seng Tech. I mean, this is without a doubt the story of the day. Difficult to overstate how in one strong signal we're getting out of China's State Council. With one single meeting, they've pledged to keep China capital markets stable. They vowed to support overseas stock listings. They said also the dialogue with the U.S. is pretty good in terms of ADRs. Right, this is my terminal chart of the day, all about the Fed, but more than what the Fed does today, it really is what happens after that. So, the questions are what happens beyond the Fed decision today. Financial conditions is what we've been looking at, and you can see as the Fed starts hiking with financial conditions at close levels to 2018, what does it mean for its transmission mechanism and some of course, the tightening that's already being done for them. So levels at which the Fed previously paused its tightening path, and this is where we are now, something that we saw back in mid-2019. Now, let's get it. The key market drivers with our Markets Live editor, Eddie van der Walt. Eddie, it's all about the Fed, but how much of what the Fed is expected to do is already priced in?
Yeah, absolutely. You know what? I think it is all about the Fed today. It's not often that the Fed is overshadowed on Fed Day. China made a pretty good attempt this morning, though. I think, look, what we're looking for from the Fed is exactly, whether there are outliers in the voters. Is Bullard, maybe going to say he wants to see 50 basis points, the dot plot, and then the inflation path. I think those are the big things that people are waiting for. So I think there's the hike is priced in, but there's still a lot of questions to be answered today.
Yeah, Eddie, on China, a lot of people are saying, look, this is the whatever it takes moment, maybe in China, because in one single beat, they addressed the 5 concerns that investors had. Another saying, look, this is platitudes, and they could reverse it pretty quickly. How do we find out what the broader market thinks longer term?
Look, they can reverse it very quickly, but this is certainly a big bang from China. And the market, is paying heed. We're seeing the Hang Seng up something like 9% at one point this morning, and on a heavy volume too, 180% above the 100-day average for the volume for the Hang Seng. So I think traders are buying into this for the moment at least. Whether that continues to be the case, that remains to be seen. But at the moment, I think it's also spilling over into Europe. Less of an up day in Europe because Europe still have those Ukraine questions to answer.
Yeah, what about nickel, Eddie? So I think it dropped by, 5%, which was the exchange limit. How much volatility are we going to see in some of these prices?
Francine, absolutely. I love my job. There is so much to talk about at the moment. And, I think, yes, the nickel market, of course, there was always going to be a bit of a pullback today, simply because the market had been in panic mode, and it's been given some time, and nothing cures panic like time, right? Now, I don't think all of the problems in the nickel market have been solved, and prices will remain elevated for some time to come, probably. But I think, just the fact that there has been a little bit of a breather gives the nickel market some sense of calm. However, the LME has taken a bit of a hit in terms of confidence in the trading venue.
Eddie, I want to ask you about Russia, but I also want to ask you about financial conditions as they've been tightening, and we saw that, and we've had some amazing charts done by Valerie throughout the last couple of weeks. As financial conditions tighten, it's basically been doing a bit of the job for the Fed. What does it mean for how many hikes are priced in now?
Yeah, you know what? Cameron Kreis over on Markets Live wrote a really good piece the other day saying, look, if you're coming at markets cold and you're just looking at the brand new numbers, you would be expecting the Fed to cut rates at this point, not be at the start of a hiking cycle, right? But I think there's a lot of question marks out there. And of course, the biggest wild card is inflation. And the Fed and other central banks feel that they, at this point, have to respond to inflation. And I think that's going to continue. And that's probably a good thing for places like Europe, where rates have sat so low for so long, and for their banking industry and all of the other additional markets that have suffered on low rates.
Eddie, let us go back to 1998 and look at a possibility of a Russian default. We heard overnight Fitch also saying that Russia is going to default if they pay the dollar coupon in rubles. What are the second and third round effects of that right now? I know we've been talking about it, and maybe investors have been bracing for that for the last couple of weeks.
Impossible to call. It's just, it's so hard to see what the full fallout of this is going to be. Who's got exposure to Russia? I think a lot of investors over the last, couple of weeks will have woken up and said, hang on a second, I didn't think I had that much Russian exposure in my portfolio. I thought I owned European banks, right? Or whatever. And so I think there's going to be big investors that have taken on a lot of Russian debt, because of course this was investment grade debt, right? And now they're going to see that they're going to face default on that investment grade debt. And I think there's going to be a lot of pension funds, there's going to be a lot of hedge funds, and I don't think we know anything like what the full fallout of this is going to be.
Eddie, thank you so much. As always, so nice to have you back on the program. Bloomberg MLive editor Eddie van der Walt. Now, coming up, we speak to BMW's chief executive Oliver Zipse on their annual report. That interview is up next, and this is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to The Open, everyone. One company in focus this morning, BMW. The chief executive, Oliver Zipse, spoke with me earlier on their 2021 annual report discussing raw materials and the effects of the war in Ukraine on profits and production.
We had a great year in 2021, and now we have, as you ask, with the problem with the Ukraine. The first thing and most important thing, we need to help wherever we can. As a first measure, we spend 1 million euros to UNICEF, but that is only the start of our support to the humanitarian crisis we see in the Ukraine. The second point is we have to secure our operations, specifically for the wire harness. As you know, our plants here in Munich and Dingolfing has been standing idle this week. They will, albeit, continue next week already. And so we tried to mitigate the direct effects from the supply chain. But we're optimistic that in the short and midterm, we can mitigate that. And the third point, equally important, is that we continue to implement our long-term strategy towards climate neutrality, to ramp up electromobility and the digitalization of our vehicle fleet.
Mr. Zipse, you talk about mitigating some of the component shortages. How do you do that?
Well, first of all, we don't have a single source really from our wire harnesses in the western part of the Ukraine. And since we do not have that single source, we are able to relocate some of the components we have there. And as I said before, we will be able to ramp up the two plants who have been standing idle. And moreover, our U.S. operations and our Chinese operations have never been affected so far. And so I think we will be able to cope with the current situation.
Mr. Zipse, I think you've had to also shut down a number of plants because of these supply shortages of cable components. How likely is it that you'll have to do it again?
You know, it's very difficult to foresee what is happening. As you know, every day something else is happening. So to make a forecast for the next couple of weeks is really difficult. But on the other hand, you know, production systems are very flexible and they react very dynamically to changing situations. And we will have to try to cope with that. To have a real forecast is very difficult. On the other hand, on the 2022 outlook overall, we foresee, as it is current, to be on the same level on sales than in the past year. You know, that's our current thing.
Yeah.
On the profit side, we will have an EBIT of 7 to 9%. And but for other reasons, the pre-tax profit will be significantly higher this year compared to last year.
Yeah. And I understand the situation is extremely difficult to forecast, but is the risk to the upside? Is it likely or very likely that you'll have to idle some of the production because of the ongoing situation?
Look, production is currently influenced by various factors. We still have the semiconductor issue, which is continuing, and it will continue during at least the first half of this year. Then we have, on specific sides, we also have the corona pandemic affecting one or the other operation. And then on a third spot, we have the discussion we just had before. So as a matter of fact, the further impacts we foresee today is part of our outlook, which I just said, that we will be on the sales side about the level of last year.
How much of a headwind are some of these very high raw material prices?
You know, BMW has a hedging strategy on electricity, on gas prices, and also on other components we have. So in the short term, there's not a big influence. Now, in the long term, we have to see where they really develop. As you see, we have spikes today. We're not so much affected because most resources we have hedged so far. And the rest we will have to see. And what is very important, that we try to use secondary material in the mid and long term to reduce the impact of the raw material prices on our business.
Well, that was the chief executive of BMW, Oliver Zipse, speaking to us a little bit earlier. Now, nickel actually trading just open about 15 minutes ago and instantly dropped by the daily limit of 5%. The LME market in the metal will remain close to useless for any kind of macro signal until the massive position built by metals tycoon Zhang Guangda is unwound. That's according to some of our market live strategists. So watch out for that. Currently down some 8.3%. I don't know whether it's halted again because it reached that limit, but certainly it fell quite significantly at the open. Coming up, we speak with CCLA investment manager Charlotte Ryland. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 18 minutes into the European trading day, and you can see European stocks gaining some 2%. And Hong Kong tech, the Hang Seng Tech, this is the main story of the day with that huge, huge support from China. A lot of people saying this could be their whatever it takes moment. Others saying, look, I don't know whether they promise or they pledge through some of their promises, but certainly China's stunning equity rally amid warm state support threatens to be another false dawn for some. So it depends on where you are on that side of the story. And then nickel down some 5%, well, down 8.3%, but once it reached that 5% limit, it's actually no longer trading, I believe. So we'll keep an eye on when it reopens. A better way of valuing it could be over in China, because that's the only other place where nickel trades. Now let's get straight to the markets with Charlotte Ryland, CCLA Investment Management. Charlotte, thank you. There's so much going on. I mean, this was meant to be the Fed day, right, where we were finally, figure out what they meant for the future after hiking, possibly, well, hiking today. But actually, it's all about China.
No, it is, absolutely. I mean, a pretty stunning announcement. I mean, clearly the Chinese market has been incredibly volatile over the last few days. And that's been partly, worries about, relations with China and Russia, therefore that having a rollover in terms of relations with the US statements about, auditing and of Chinese companies listed in the US and whether those have to be forced off the listings. And the Chinese have come out today with sort of, pretty amazing statement in terms of, they're going to slow down on regulation of big tech companies, they are going to work on those audit things for the US, et cetera, et cetera. So
I've been hitting the phones, and half the people tell me, look, this is a false dawn, and then the others saying, it's you can't underestimate how big this is. So where are you on this?
I think, well, it's a little early to tell. I mean, I suppose there are still some big underlying problems within the Chinese economy. They have got this property market, which they've been slowing quite dramatically. A lot of the property companies are in difficulties. Yeah. The property market is definitely falling, and the sort of fallout from that is going to be difficult to work out. And, of course, you've got the COVID thing. They are still shutting down. It's still a huge issue in China because they have a huge unvaccinated population, particularly amongst the elderly. They have a very, underinvested healthcare system. So, it could be very serious.
So, but how much of a support is that for broader markets where you're looking at a possible Russia default? Again, we don't know the second round effects. We saw these raw materials really out of control. Yeah. So is that a stabilizing force for world equities?
Yeah, I think it certainly helps. Some of the raw materials are beginning to roll over now. We saw 120 on oil is now come back down below 100, because the Europeans are not cutting off, the supply from Russia. Things like the nickel market obviously slowing down again today after having some fairly extraordinary moves. But the underlying picture is, that they are still pretty tight, commodity markets, and there's still a fair degree of supply disruption in the economies, and that only exacerbated with COVID.
So how do you build your portfolio?
Exactly.
How do you make your money?
Exactly. So, I mean, for us, we've still got a reasonable amount of cash within the portfolios. We raised quite a lot in the fourth quarter, and we've been cautiously adding to things, but, to a certain extent, keeping that cash in the portfolio. And certainly looking at sort of some of the fund manager surveys, they're in sort of fairly similar position. I think quite a lot of people are quite liquid still at the moment. I think we're pretty cautious.
What, go to cash?
Not completely to cash, no, but have a slightly higher cash weighting than you might normally do, because it is so incredibly uncertain. I think the consumer is definitely in quite a difficult place, and that's something that we've been pulling back on, whether that be some of the consumer staples with some of the inflation they're seeing, or particularly on the discretionary side, because the consumer is going to be in a very difficult place this year.
So does that mean that earnings will be hit? So are we looking at a stacked inflationary environment, and do we need to throw away all of our earnings forecasts?
Well, I mean, I think if you look at the economist forecast, they're still saying positive growth for this year. They're still saying 2-3%. Yes, it's going to be slower. It's going to be particularly slower in Europe, but actually the US isn't looking too bad. The Fed are, we would expect, tightening today, and they will continue on that path. It's 5, 6, 7 rate hikes possibly, but still actually that's taking rates to a level they probably were in 2018. So it's not hugely high. So I think it's still a growing economy. It's just not growing as much as it was. And there are still going to be interesting areas.
I mean, given they flagged it so much, there's no way that the Fed can't hike today, right?
I would be incredibly surprised. But we will see.
Would that be like a mistake, a communication mistake, if they don't do anything?
I mean,
or a policy mistake?
It would be, I mean, having, with inflation so high, with the latest CPI print being so high, to have done nothing at all, I think would not be taken terribly well in the US. So I think they have to do something. And they're only talking about 25 basis points. It's really not huge. It's just moving us in the right direction.
What do you do with treasuries right now?
We have no exposure to the bond market. We still think they're incredibly overvalued and still incredibly, vulnerable to inflation and interest rates moving up. So it's not an area we have exposure to.
Do you have exposure to China?
We have exposure to China mainly indirectly, so we don't actually own anything within China direct, it's through companies that have businesses within China. So.
Yeah, Charlotte, I mean, your world has changed because this is moving so fast. I mean, it's been, for the last 2 years, but it's really accelerated with the war in Ukraine and trying to understand sanctions.
Yeah.
What does it mean as a portfolio manager, as a chief investment officer, how you keep and consume the news?
Yeah, I mean, I think it's about finding a portfolio of really good quality companies which have got decent gross margins, which have got pricing power and therefore can cope in these incredibly volatile times. And it's also focusing on some of those, longer term themes, and not just thinking about, what's happening in the next 5 minutes. It's about saying, actually, there's a big transition in terms of cloud, in terms of IT. What might be the beneficiaries of that, or healthcare in particular, where there's a lot of innovation.
Do you see any value in Europe? Is there anything that looks attractive given the raw commodities crunch, the proximity also to a war, and the fact that we don't know second or third round effects or freezing out the 11th biggest economy in the world?
No, absolutely. I mean, I have seen the markets, really sell off the European stock market quite aggressively, and so I think there are some, very decent quality companies within Europe that probably are looking more attractive now. So, something like an ASML, for example, we think looks reasonable. About some of the luxury plays. Yes, they're probably over-earned over the last year or so, but actually those are pretty solid companies, things like LVMH, for example. Or equally some, things like Nestle, for example. Yes, there'll be some more material pressure on that company, but equally it's a very stable, business.
Do you have doubts about what the European Central Bank is doing and how that impacts actually the decision-making you have on European stocks?
I think the ECB is going to have to take quite a cautious approach in terms of raising rates. I mean, the inflation pressures perhaps haven't been quite so severe in the US, but in Europe versus things like the labour markets. But clearly, with gas prices moving up so dramatically, particularly in places like Netherlands, Germany, where they're so dependent on Russia, that is going to have to put them in a very difficult position. So I think they need to sort of slowly move away from QE, but possibly not, very dramatic tightenings.
Yeah, is there any, when you look at emerging markets, and I don't know whether there was a broad sell-off because of what happened with Russia, or whether you look, I mean, I had someone, trying to look at, for example, the voting on the UN Security Council and saying these are maybe emerging markets that are too tied to Russia, and so that will have, again, repercussions longer term. How do you look at emerging markets?
I mean, we don't tend to make a top-down allocation to a particular economy. It's very much about the individual companies. And there will be economies in there, which are tied into the commodity prices and actually benefit from them. So, whether you be Brazil or some of the Latin American companies. But equally, offsetting against that, is still quite a difficult situation in terms of growth from those economies. So I don't think it's an easy place to be.
What do you do with some of the pandemic stocks? I know you were talking about Netflix, for example. Is that play over, or because of the zero COVID tolerance policy in China, you still have investment opportunities, especially on a day where it's down?
Yeah, so I mean, I think in terms of the COVID reopening, that's still happening. If you look at the mobility data and things, people are going out to restaurants, they are beginning to book up holidays, all of that stuff is happening. I suppose the counter to that is how weak the consumer might be. So, there are opportunities emerging.
All right, Charlotte, thanks so much. Charlotte Ryland there of CCLA. Coming up, while the war rages on in Ukraine, NATO defense ministers meet today in Brussels. That's after prime ministers visited Kyiv to meet with President Zelensky in a show of support. We'll get the latest on the ground. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
From New York City,
Here in London,
In Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. China vows stability for stock markets and pledges to back overseas listings. The Hang Seng Tech Index jumps the most ever. The war in Ukraine rages. President Zelensky will address the U.S. Congress today. President Biden travels to Europe next week. Plus, bracing for Fed Day, Treasuries and the dollar trade little changed. Markets prepare for the first rate hike since 2018. It's very clear that China actually stole a lot of that limelight with what we heard announced earlier on today. Now, that's supporting the broader markets. You can see the DAX gaining some 2.4%, the FTSE gaining 1.5%. Now, stocks overall surged after China moved to ease a range of concerns that investors really had at the forefront of their mind. If you look at the sectors that are on the move the most, it's really those that were cut down in the last couple of weeks. Now, China, and I can't underestimate, because this feels big, I cannot underestimate what a big move this could mean. This is after weeks of worries about war and high inflation, and the fact that China just came in and said, guys, we hear you, we're concerned, we'll put a floor over it. We don't know whether it holds, but certainly technology getting some 4.5%, travel and leisure, financial services also gaining, Treasury yields rising ahead of the Federal Reserve's rate decision. So we'll have plenty more, of course, on that. We're also looking at live pictures from NATO headquarters over in Brussels. Well, U.S. Secretary of Defense Lloyd Austin is speaking alongside NATO Secretary General Jens Stoltenberg. Let's listen in.
We'll continue to support them going forward. We've been clear throughout that we believe that our commitment to NATO, our Article 5 commitment, is ironclad, and you can expect that, as the President has said a number of times, that we will abide by that commitment. And so, Jens, it's great to be back here again. I look forward to a good day of discussions. And again, thank you for your leadership, and thanks to all of my colleagues for what they've continued to do to remain united in their support of Ukraine. Again, I look forward to a great day.
Thank you so much.
NATO headquarters there in Brussels. Now, in a show of support for Ukraine, the prime ministers of Poland, the Czech Republic, and Slovenia have visited the country's capital, Kiev, to meet with President Zelensky. Meanwhile, the U.S. president will travel to Brussels next week to meet with NATO allies and take part in a summit of EU leaders as Russia presses on with this invasion of Ukraine. Now, NATO defense ministers are set to gather today to discuss the crisis. Well, let's get to our reporters covering the crisis. Maria Tadeo is in Brussels for NATO, Aggie Cantrell in Medica and Poland near the Ukraine border. So thank you both for joining us. First of all, Maria, what's top of the agenda for these NATO ministers? What are they concretely discussing?
Well, Francine, we just heard from the NATO Secretary General repeating, and actually in a very explicit way, saying a lot of these discussions will be about the future of the alliance, particularly in Eastern Europe. Particularly, he mentioned Estonia, Lithuania, Poland, and Romania. Remember, the Eastern European countries have now signaled for weeks that they fear an increasingly aggressive Russia on the Eastern Front. The other thing, of course, is the Secretary General repeating, again, in a very explicit way, this is the quote, that today, after this meeting, there should be no misunderstanding or miscommunication from Moscow, that Article 5 really is sacred for all of the members of the alliance. An attack against one will be seen as an attack against all. A lot of this goes to what is now seen as the core of the issue here by NATO members, which is how to prevent the war in Ukraine from spilling over to NATO members, particularly in Poland. We know the Polish government has said for days now they're concerned about some of the activities in the border, particularly after over the weekend a training facility was hit by a missile that's 20 kilometers away from Poland. So that will be very much the subject of discussion today, how to strengthen the eastern flank.
And Aggie, what was the significance of the visit from the Polish, Czech, and Slovakian prime ministers? I have to say it was very touching to see them in a war zone alongside President Zelensky.
Yes, so we saw 3 European leaders head to Kiev, a place where there is an active war on the ground in Ukraine. 3 European leaders went to Kiev yesterday to meet with President Zelensky in what really is an explicit show of support for the Ukrainian people. That was already noted in many different ways that people have said up until that point. And before the war, many European leaders had visited Kiev in January and February ahead of the Russia invasion. But it is significant to note that these 3 European leaders went to express their solidarity at a time when half of the population of Kiev has now fled, and the city is now under a lockdown until tomorrow morning. As Maria said, what is important to notice as well is that Poland recognizes this isn't just a concern of Ukrainian security, but more broadly European security, especially for the Eastern European nations that are on Ukraine's borders, such as Poland.
Great. Thank you both. Some great reporting on the ground. Bloomberg's Maria today on Brussels and our Aggie Cantrell at the Poland-Ukraine border. Now, joining us to talk about all of this, talk about the markets, the Fed, treasuries, and everything in between is Joe Davies. He's chief economist and head of investment strategy group at Vanguard. Joe, thank you for joining us. What a crazy day in terms of China, in terms of raw materials. We could possibly be looking at a Russia default. There are so many unknowns, and yet China, with this big move, is trying, I guess, to do their bit, maybe, for the markets. How helpful is that for the broader markets?
Well, I think it is just symbolic of there is weakness. And, we were seeing a deceleration even before the very unfortunate events in Ukraine, Francine. So I think what China's trying to do, I think they're among the weaker relative to expectations that we see. The real estate market will continue to be a headwind. And so we have long anticipated when weakness was below expectations that we would see policy support. And I think we're seeing that this morning.
Joseph, there's really something that caught my eye in your key views, which is basically the market is focused on the wrong inflation measure. So are we focusing on the wrong one, or are we just measuring it wrong?
No, I think the wage inflation measures are going to be important for central bank tightening. I mean, we have 2 forces going on. We have supply shocks in the global economy that are very unfortunate, driving up commodity prices. At the same time, there are demand forces that are pushing unemployment rates lower and lower and lower. So I think investors would be mindful to focus on wage inflation. That'll ultimately determine the more genuine policy normalization that we need to see.
Are we very close to a stagflation environment? I know most economists are still not expecting that, but actually the market is kind of veering that way.
Well, it's possible, and it's higher odds than I would have said just 6 months ago. The path of oil prices will be the primary determinant if we would ever see stagflation. Now, it's clear a stagflationary shock with the unfortunate events in Ukraine, but oil would need to be roughly $150, $140 a barrel. We're not there
for a protracted time.
Yes. No. Again, inflation is uncomfortably high in any part of the world. Yeah. We would need to see weakness in the labor market, shedding jobs, unemployment rates rising to meet the true definition of stagflation. Hopefully, we don't cross that threshold.
Do you think we're looking at stagflation? And is there anything that you don't think that there's stagflation? So there's nothing that policymakers should worry about now to make sure that they cut off the stagflationary pressures?
Well, again, there's going to be this continued tension. I think you have to really look at there's competing forces. Commodity prices in general, believe it or not, say to me central banks should be very cautious in raising rates. However, the labor market says is they should have raised rates, some time ago. And so I think many central banks, the Federal Reserve, I think we'll see that today, will kind of thread that needle and split the difference and take a more gradual approach.
But these competing forces are because of COVID, so it's been
a strain of supply shocks. It was certainly COVID, Francine, but the unfortunate events in Ukraine have added another shock of supply to a global market and commodity markets that already had very few, excess capacity. And so I think we're going to have this push and pull. Demand is clearly strong. It was always going to slow this year. And so I think that's where central banks have to be cautious here, but they have to also raise rates off of zero.
So, Joe, first of all, what's priced in the markets right now?
I think what's priced in the markets is the central banks effectively engineering a soft landing. Now, historically, that's a tough feat to engineer, which is why we were cautious on the financial markets. Not that they were going to have a significant sell-off, but valuations going into this year were, it said the markets were somewhat vulnerable because the past performance has been so stellar. And so I think we're seeing some of that breather. Ultimately, I think it is healthy, even though it may not be pleasant to experience.
But do we need more of a correction from here? I feel like some of the earnings reports or, earnings forecast and the fact that you're right. I mean, soft landing is extremely difficult to engineer, especially when you have Aurora raging and we're trying to freeze out the 11th biggest economy in the world. Are we underestimating the second round effects?
Well, certainly we could be. I mean, I think let's look at the assumptions. If commodity prices hover where they currently are, they are uncomfortably high, that will not derail the global economy and it won't be close. And so I think 6 months from now, unless that changes, we will see continued growth.
But nickel's all over the place.
Yes,
so maybe let's leave nickel to one side. But if you look at wheat, are we underestimating these inflationary forces in terms of household spending?
Well, certainly that's going to be one of the catalysts for slowdowns. We are going to see some choppy waters here, certainly in Europe. We're going to see it in the UK, and we're going to see it in the United States. And so what that tells me is that the central banks will be biased for action, but they don't necessarily have to raise rates every meeting. Much more important is ensuring that they thread this needle.
Yeah, which is what, communication with the markets so that there's not unwarranted market sell-off.
Focusing back to your question before, Francine, on the wage inflation, because the consumer inflation is uncomfortably high, intolerably high, but it's both supply and demand. The wage inflation is much more, I would say, genuine read on the strength of inflationary pressures.
You've also reminded me that actually geopolitical sell-offs are typically short-lived.
Yes.
Is this time different because of the size? I mean, again, the size of Russia, I know it's not that big in terms of GDP, but the links are still huge.
The links are still worrisome. It's an unfortunate event. I would hope that what has happened historically from the financial markets perspective rings true going forward. But it's tough to have very high conviction because that means that one has a sort of, some sort of really perfect read on geopolitical events. It's tough. But generally speaking, they are short-lived, even if the political trauma is much longer lasting.
All right, Joe, thanks so much. Joe Davies there, Chief Economist and Head of Investment Strategy Group at Vanguard, stays with us, and we'll talk a lot more about China and maybe some of the emerging markets. China vows to support the stock market, adding that it will back up overseas share listings after the Hang Seng Tech Index rocketed this morning. We discuss that next. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, Ukraine, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open, everyone. 44 minutes into the European trading day, we're seeing quite a lot of support in the broader markets. European stocks gaining some 2.2%, the DAX 2.5% higher. Now, China vowed to support the stock market with this policy push. Beijing is really trying to ease investor fears on risks coming from the property market, overseas listings, and internet companies. The announcement has prompted Chinese stocks to jump the most since 2008. Now, the Hang Seng China Enterprise Index, which tracks mainland companies listed in Hong Kong, went up as much as 12% in today's session. Well, joining us now is Bloomberg TV Asian Markets Editor David Ingles in Hong Kong. David, thank you so much for a very long day. I know you've been up for like a million years to help us go through exactly what we're seeing. So this is either a false dawn or this is the hugest thing that's happened in Chinese markets for a while. They're, whatever it takes moment.
I was about to say that. It's akin to Mario Draghi's whatever it takes moment. And really, when you look at the list of risks that this markets had to deal with up until last week, and then you added 2 more this week with the virus and the delisting concerns, they really had to come out with not just a strong message, but really who that message came from to remove a big part of that risk premium, right? So, I mean, this isn't simply state media quoting somebody or giving us an indication of policy orientation. This was the State Council, that's the highest policy-making body in China. And then you had the PBOC shortly after that coming out and saying, yeah, we're looking at plans and how we will implement that list of objectives that the State Council came out with. And notwithstanding, of course, things like stabilizing the market, talking about how we might see the end soon to this regulatory overhang on tech names, and also addressing some of the issues concerning overseas listings in China. So as you pointed out, markets responded. Best day in Hong Kong in 14 years, the highest volume in 10. That says a lot.
Yeah, I mean, I have some commentators saying this is another false dawn for the asset class, though, for some of the Chinese equities. When do we know what this is exactly, and what happens next? Like, the timing seems pretty significant of doing it now.
It really is. We've been joking here in the Asia Pacific that this market has been trying to find a bottom as long as dentists have been after your wisdom teeth, right? At some point they're going to get there. They know it's there. But, when you actually get to that point, it's going to be painful, but you're going to get there. But, I mean, yeah, interesting timing to do it today. You had the Fed coming up, and I would imagine if they did something to Fed that really led to markets being more risk averse, it probably was the last thing that was going to nail this market. The risk assets here in Hong Kong and up in China. The second thing I'd want to mention, too, it's all about the wealth effect. The stores of wealth on the mainland, 2 things. It's the market and it's the property market. Both are not doing well. We had house prices today showing a 6th month of contraction. So that's not doing well. And the market's down 20–30%. People are bound to feel bad. And, they came out with something that perhaps make people feel good going into Thursday.
David, thank you so much. David Inglis there in Hong Kong. Let's get back to Joe Davies, Chief Economist and Head of Investment Strategy Group at Vanguard. Joe, I mean, David was quite funny talking about the wisdom teeth. We both had a chuckle, and it was a really good analogy.
Yes.
So China vows, to keep the market stable. Is this also, a forward-looking? Is it like an overture to the U.S., or are we reading too much into it?
I think that's too much, but I think it's closer to bazooka in terms of the policy support. It's stronger than I would have anticipated, China. I mean, I think that's telling us two things. One is the headwinds are fairly significant. They were concerned about their growth targets. It's tough to engineer a deleveraging in real estate and to put a floor on their prices. So I think the financial support is something that is going to be supportive. I think this may stick with us for some time.
So does it make you more comfortable then with possible exposure to China, or is that still a question mark?
Well, yes, in terms of the emerging markets. I mean, again, they've taken a beating. This is not the only year it's been. So we're starting to enter territory. We'd say as a long-term investor, you want to have exposure to these markets. And usually when the headlines are not the rosiest is precisely when you want to put capital to work.
What do you do with nickel? I mean, we're both obsessed with the nickel market. Is it just broken? Does the LME, do you need to look at the pricing in China? Because the LME for the moment just needs to figure out what it's doing.
I think we just have to take a breath a little bit. I mean, I think let's see how the next 2 weeks play out. I mean, we saw the same thing in oil. Hopefully we see stabilization there. So, I mean, the price power, although it's been eye-watering in terms of the increase, Francine, there is a response effect. When prices go up, supply, it could be modest, should come online, and so I'm hopeful we'll see some of that.
Yeah, and that's how things should be.
It's how they should be.
Are we going too fast? Is the news cycle just, too relentless?
Well, I mean, I think ever since COVID, it's a really good point, Francine. The entire cycle has been compressed and accelerated, both on the way down and the way up. I think we're still living through some of this environment. So I think, again, how central banks, I keep coming back to central banks because that's the one risk factor that can help try to stabilize the supply, the demand side, because the supply issues are still there.
My team will tell you I'm obsessed with Russian bonds because, and I have people come in, day in, day out saying, look, it's fairly shielded, but what if there's a default? I mean, again, we don't know what hedge funds hold it or things like that. How do you look at it from your perspective?
Well, I just think for most investors, it's broad exposure and how the benchmarks have been defined, right? They're public and liquid and so forth. So I think it's the Bloombergs, MSCIs, how they define the benchmarks. I think that's really important, and I think that's how most asset managers would think about it.
Okay. Joe, what's most mispriced in the markets? The most difficult question you'll have to answer this week.
Well, I would have said before it was growth stock, technology stocks. A multi-year run, they were well extended over fundamentals. That was one of the themes of our outlook. This year, I think it's more the value-based parts of the global equity markets. It may not be as exciting, but on a secular basis, they could have significant outperformance. Part of that is closing the gap just over the past decade.
Okay. Joe, thank you so much for joining us. Joe Davies, Chief Economist and Head of Investment Strategy Group at Vanguard, joining us today. Now, coming up, nickel trading reopening on the LME after one of the most dramatic weeks in metals markets history. Didn't stay open for long, though. It's pretty dramatic today as well. We'll have more on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 53 minutes into the European trading day, and you can see stocks being supported by the announcement in China. So stocks are surging today. This is the picture across the board. China, again, vowing to stabilize some of these battered markets. They lifted sentiment after weeks of concerns, not only about valuation, but of course, worries about war and higher inflation. This is the picture for Alibaba and Tencent. They finished the day up some 20%. Treasury yields also rising ahead of the Federal Reserve's rates decision. That will be a little bit later on, partly overshadowed, if not completely overshadowed, by that China announcement. Nickel trading has resumed on the LME after one of the most dramatic weeks in metals markets history, which plunged the entire market into chaos. Now, for more, we're joined by Bloomberg's Stephen Stepczynski. Stephen, what 2 weeks? I mean, the nickel story is really pretty crazy. What was the market expecting?
Well, the market was expecting a limit down 5%, and that's exactly what happened when it opened up. Nickel fell 5%. The LME said that there were some technical issues that forced them to halt trading. There might have been some trades that were below the 5% marker there, and so they're looking into that. But trading has been halted after just a few minutes into the session, and that was largely expected. You know, prices were expected to come down. Analysts were saying that we were probably going to see a limit down, and it still is a long ways away from the Chinese prices that China has been trading over the last week. LME hasn't, so it kind of fits some of that gap. But going forward, volatility is going to be the name of the game, I think.
Yeah. Stephen, I mean, there are a number of people that are saying, look, because the LME is, you know, for the moment broken, certainly when it comes to nickel, they need to figure out what they do next. The real way of pricing nickel should be in China.
Yeah. I mean, that's the market that has the ability to trade up and down. When LME, if things just move by 5% and it's done, there's not much wiggle room there. Also, I think there are a lot of folks who don't really have much faith in the exchange because LME did cancel a lot of those trades on Tuesday. You know, you have to remember, Monday and Tuesday, prices were up 250%. Now, when you have a limit of 5%, that doesn't really offer much ability. And if you have to make that gap and continue going down, that's going to be a lot of limit down days. And that's going to be a lot of time where people aren't going to be able to enter a position or trade it like an actual market. So Shanghai provides you with the ability to actually trade the metal. But of course, LME has always been a benchmark. You're going to see a shift in the short term. That is something that analysts are looking at very closely.
Stephen, thank you so much for joining us. Stephen Stepczynski there on the pretty incredible story of nickel. We'll continue watching nickel throughout the week and months, and of course look at that pricing over in China. In the meantime, NATO defense ministers are meeting live. We also heard that President Biden of the U.S. will then come to Europe, to Brussels next week. Well, that's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup of the news with Anna, Kaylee, and Matt. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is the worst world, right, for central bank.
There's a lot going on, and frankly, it's getting easier to be bearish.
A lot of the weakness under the surface predated the invasion.
The dollar or treasuries as a risk-free asset isn't so risk-free. It's not risk-free if you're Russian, and maybe if you're Chinese, you're like, might not be risk-free either.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, March 16th. Our top stories today. China gives stocks a booster shot. Chinese equities soar after Beijing pledges to support markets and stimulate economic growth. President Biden heads to Europe next week to meet with NATO allies on the war in Ukraine. And today, Ukraine's president will deliver a virtual address to the U.S. Congress. And the Federal Reserve is poised to raise interest rates to help contain inflation. Meanwhile, President Biden's pick to be the top banking regulator has bowed out after failing to win enough support in the Senate. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, we spend a lot of time, of course, talking about war in Europe. From a market's perspective, it is the commentary, the verbal intervention from China that is really worth talking about this morning.
Yeah, absolutely. Stepping in to stop the plunge we have seen in Chinese assets. And I'll get to that in just a moment. I do want to, though, quickly touch on some breaking news out of the IEA, which has says that its Russian oil output forecast will be slumping by a quarter next month. They say 3 million barrels of Russian oil output potentially shut in from April. They're also revising down their 2022 global oil demand forecast by 950,000 barrels a day. Not too much reaction, though, when it comes to oil prices. We did, though, see a big reaction across Asian assets to that commentary we got out of China. Beijing pledging to support financial markets, support the economy, talk to U.S. regulators about ADR, support overseas listings, all of that leading to a huge boost in risk sentiment in Asia. You had the MSCI Asia Pacific Index as a whole up more than 3 percentage points, the best day for it since back in 2020, but really massive moves when it comes to some specific indices in Hong Kong and China. The Hang Seng China Enterprise Index was up 12.5%, the best day since 2008, and the Hang Seng Tech Index was up 22 percentage points in one single session. That is by far the best day ever. You had the likes of Tencent up 23%, JD.com up by more than 30%, just massive, massive moves. And I would point out it wasn't just limited to equities. The commentary about supporting the economy also giving a lift to some commodities, including iron ore, which was up about 8% for those futures in Singapore, trading just south of $150 a ton, Matt.
All right, very interesting stuff indeed. Green across the screen.
there. We have green here and futures as well. After the late day rally yesterday, up more than 2% on the S&P. Futures are up now more than 1%. The 10-year yield, I should say, rising to 2.1670. So the Treasury's yields are rising as investors feel comfortable enough to let go of that debt. That's why it's red. New York crude up 160, but still under 100 at 97.98, and Bitcoin just over 40,000 right now. Of course, we talk so much about how correlated this is with risk assets. $40,432 for a Bitcoin today. Anna?
Let's have a look at the European map then, Matt, and it is really positive. We have a move to the upside for European stocks, really coming off the back of what Kaylee was talking about there. But even before we got those supportive lines coming through from China, verbal intervention at least at this point, even before that, the European equity markets missed out on the late in the day rally we saw stateside, so already had a little bit of catch up. We're now up by more than 2.5% on the CAC 40 and on the Xetra DAX. Let me roll across and show you a little bit of the read across that we're seeing into other assets here, and actually focus in first on nickel. We've seen the resumption of trading at the London Metals Exchange, although if you blinked, you missed it because it didn't last long. They came back with a 5% limit down, limit up, sort of control around the markets, but that didn't seem to go all that well. They've now had to suspend trading once again. As you can see, we're down by 8.3% on the nickel price, which doesn't seem to make sense given the limits that should be in place. So some technical questions about whether that limit is actually working. So we'll wait to see about resumption there. This is the Asia story that Kaylee went through there, and that positivity coming through into Europe, because this is a business that's based in the Netherlands but owns a big stake in Tencent, the Chinese tech name, of course, and so as a result up by 18.6%. Avast, this is a cybersecurity business. Norton LifeLock, which is a US cyber business, has made an offer for this company, but it looks as if that might get referred to competition authorities, take a little bit more time to get done, and so the stock trades to the downside. And EQT in the private equity space, this is a really interesting story. This is the biggest private equity deal we're seeing to buy another private equity deal. This is EQT buying an Asian business, the Bearings Asia PE business, and as a result, even the acquirer moving to the upside, up by just shy of 8%, Kaylee.
All right, some interesting stocks to watch in today's session, Anna. There's also a lot more to watch throughout the day. It's going to be a big Wednesday. First, we have Ukrainian President Zelensky addressing the U.S. Congress at 9 a.m. New York time, so the war in Ukraine front and center there. Then when it comes to Russia, it faces its first foreign currency bond payment since its invasion of Ukraine. And remember, if it pays in rubles, that still counts as a default. And finally, it is the Fed day as well. Its rate decision will be coming at 2 p.m. New York time. Of course, a 25 basis point hike essentially priced in, Matt.
All right, we will definitely be focusing on that throughout the day. Right now, I want to get to our global coverage of what's going on around the world from Hong Kong, Brussels, Medyka, Poland, Washington, D.C., and London, England. We begin with Enda Kern, our chief Asia correspondent, after China unveiled a more market-friendly policy stance, market-friendly to say the least. Enda, this is really, I think, you know, until we get to the Fed, this has to be the main market story of the day. What happened?
It's a major development. It's actually a very unusual statement as well, Matt. It's come from the top of the economic policy-making team in Beijing. Essentially, they're saying there is going to be support for the economy, there will be support for the markets, and that's a very unusual explicit mention of support for the markets. They're promising better communication of how policies will impact markets. And then on the row with US regulators over delisting of Chinese companies there and access to the books in China, they're saying they're making progress on that front. So, you know, it's a pretty bullish statement now. It was light on specifics, light on detail in terms of what policies will they be bringing along to support the markets and to support the economy. But you can see the reaction already, that huge rally in both Hong Kong and Chinese stocks. It is an unusual statement, and it does point to China focusing on stability this year above all else.
Yeah, verbal intervention then from China having a really big impact through the Asia session and filtering through globally to some extent. Enda, thank you. Enda Curran, our chief Asia correspondent. Back to the war in Europe, and President Biden will travel to Brussels next week to meet with NATO allies and take part in a summit of EU leaders as Russia presses on with its invasion of Ukraine. It comes as NATO defense ministers are due to meet today to discuss the crisis. Let's get more with our European correspondent, Maria Tadeo, who joins us now from Brussels at the NATO headquarters. What's top of the agenda for NATO ministers, Maria?
Well, Anna, we just heard from the Secretary General, again, repeating it's Article 5, this idea that if one member state gets attacked, it would be an attack on all. And he repeated there should be no miscalculation or misunderstanding of that principle by Moscow. The other big issue, of course, is Ukraine. And it's interesting because this is just happening a few hours after President Zelensky kind of hinted that the country has had a major reality check when it comes to NATO membership, with the Ukrainian President hinting and signaling that this entry to the alliance over the short term now looks very complicated, and perhaps Ukraine should be turning to other forms of security around perhaps neutrality, but with guarantees from countries around it, the big powers of the world, and of course Russia. This as negotiations continue. It is also worth noting and pointing that today we heard from the Russian Foreign Minister Sergei Lavrov saying the talks are difficult, but we see that there are some areas in which there could be a possible compromise. That also reflects the language from Zelensky yesterday night, saying the positions in the talks are now more realistic, although more time is needed to get to a deal.
All right, Bloomberg's Maria Tadeo in Brussels. Thank you so much. Now, of course, in show of support for Ukraine, the prime ministers of Poland, the Czech Republic, and Slovenia visited the country's capital, Kyiv, yesterday to meet with President Vladimir Zelensky. Let's get more with Bloomberg's Aggie Cantrell, who joins us from the Polish-Ukrainian border. Aggie, what was the significance of this visit and what came out of it?
Yes, it's difficult to actually overstate the significance of such a visit like this. This is 3 European leaders going to the center of a war zone, essentially, in order to express their solidarity with the Ukrainian people and with President Zelensky, not only from these 3 European nations, Poland, Czech Republic, and Slovenia, but also from the European Union as a whole. What came out of the talk was specifically this need to show that the European Union is going to stand alongside the Ukrainian people in this fight. And it's important to also think of it in the context of which countries went. Poland is a country which also has a very long history with Russia as well, and has been warning against the security concerns that the war in Kiev, the war in Ukraine means for the rest of Europe. And also, where I am right now, there are many, many refugees still coming over the border into Poland. This is something that is affecting Poland clearly by the fact that they've already taken in 1.8 million of the 3 million refugees that are coming from Ukraine into the European Union.
Aggie, thanks very much. Aggie Cantrell there reporting from the Poland-Ukraine border. Now, Ukrainian President Volodymyr Zelensky is set to make a virtual speech today to both chambers of Congress in the U.S. Meanwhile, on the domestic front, Sarah Bloom Raskin is withdrawn as President Biden's nominee to be the next Fed Vice Chair of Supervision. This comes after it became clear that Raskin did not have the votes to be confirmed. Bloomberg Washington correspondent Anne-Marie Horton joins us from D.C. all over both of these stories. So, Anne-Marie, first of all, what do we know about this virtual address?
Well, Matt, it's likely going to be incredibly impassioned and emotional, and President Zelensky is really going to try to implore Congress to move on his demands that the administration so far has not been willing to cross. And when you think of those demands, one is going to be, of course, those Polish fighter jets and also a no-fly zone. But just yesterday, when President's press secretary, Jen Psaki, was asked about this, she said that a no-fly zone basically means the United States shooting at Russian jets. The president last week called that, quote, that's World War III. This is something the administration has not been willing to do, but we've heard from President Zelensky in a number of addresses, most recently to Canada's parliament, saying, please close the skies. And that's what you're going to expect today.
Anne-Marie, thanks very much. Anne-Marie Horton joining us there from Washington. Now, months of speculation about a new wave of rate hikes look to be coming to a head today when the Fed is expected to begin tightening. The central bank will seek to rein in decades-high inflation that's being exacerbated by high commodity prices. Let us get more details on that with Bloomberg's Danny Berger. Good morning, Danny.
Good morning, Anna. Look, it's going to be an interesting meeting. Yes, it's been broadcast. We'll move 25 basis points today. But what will we learn about the pace of rate hikes to come? It's a very strange point to be hiking at this moment, considering bond yields look to be near a high. I have a chart in front of me for our radio listening audience that Valerie Sarasulo, our markets editor, put together for us that does such a good job of encapsulating what a weird point in the cycle this is. It's U.S. financial conditions, which have been tightening tightening. In fact, they're so tight, they are at the same level that they were back in 2018 when the Fed decides to stop their path of hiking and stays where they are. But yeah, we're about to start hiking. And not only that, the market sees 7 hikes as well. It's despite a war in Ukraine that has growth concerns that many thought would give the Fed the ability to pause and reflect, and some of the market doing some of the work for them. But of course, that war has also brought more of an inflationary impact. Commodity prices have been moving higher. Yes, there's been some back and forth, but now we have verbal, at least for now, support from China to growth. And so that's caused commodity prices to move higher again. It's yet again another inflationary force that the Fed has to deal with. Now, I do have a commodities board up in front of me, so I kind of have to mention nickel. So let me take a pause, let me take a beat right here. Anna, you mentioned it before, but we do see the price of nickel as down 8%. The issue with this is that the LME opened nickel again, saying that they had a 5% band. It moves below that. 3 trades went through that were below 5%. LME says we have a problem with our band. We're investigating. Of course, the LME just announcing they're going to cancel those trades that went below 5%. This, of course, comes after much criticism of them canceling an entire day's worth of trading, Kaylee.
Yeah, it's still not working properly. The LME says a systems error allowed those trades to be below the lower limit. Thank you so much to Bloomberg's Danny Berger for that great breakdown. Now let's get back to the U.S. market. Take a look at some stocks moving in pre-market trading here in the U.S. All of them basically related to that China intervention story, because as you saw Chinese tech stocks higher in the Asian session overnight, you're seeing the same thing with those ADRs in pre-market trading here in the U.S. Alibaba, JD.com, each higher by 20%. DiDi Global, the Chinese ride-hailing company, up 34%. You're also seeing a lift for U.S.-based casino operators like Wynn and Las Vegas Sands that also have a large presence in Macau. Maybe more support for the economy means more people are going to be going to that enclave to gamble. As a result, both of those stocks higher by 7% in early hours, Anna.
Okay, when we come back, Kaylee, we'll talk to Manish Singh, Crossbridge Capital's CIO. We seem to have gone from bear market to bull market in Chinese tech stocks in just one day. Where does that leave Manish and his strategy? We will also talk geopolitics with Elizabeth Braw, American Enterprise Institute resident fellow. Lots to discuss there about the role that NATO should be playing as we wait for President Biden to visit Europe next week. Plus, stay with Bloomberg for our coverage of the Fed decision and news conference. It all starts at 1:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Inflation.
Highest since 1982.
War.
This is the central banking nightmare because there is no good answer.
Everyone is eyeing the Fed's next move.
We are getting whipsawed.
I think they have to move.
Trust Bloomberg for the fastest coverage and exclusive analysis.
If the market is pricing 50 basis points, the Fed should walk through that door.
Look for massive adjustments.
It's going to be a very delicate task.
Bloomberg Surveillance. The Fed decides. Today on Bloomberg. The fastest way to stay one step ahead.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards out in London. I am showing a chart, for those of you listening on radio, that Danny Berger just walked us through and Anna used yesterday. But the reason I'm repeating this chart is that I think it's probably the best chart that we've had. Valerie Sarasulo made this for us since Hillary Clark's now notorious QE flags like 7 or 8 years ago. It just says so much without being too busy. It's elegant, I think. And for those of you listening on radio, it shows financial conditions, the huge drop we had in March of 2020. The drop that we're looking at right now in terms of financial conditions, because we have gone negative over the past few weeks since Russia's invasion of Ukraine, it mirrors the kind of drop that we saw in 2018. And that's when the Fed was raising rates, right? But they had to do an about face and come back before we got to the pandemic. So I think it's really interesting. 4960 is the number here. #BTV space 4960. If you're listening in your car, pull over, write that down, and check it out when you get to the office. Justina Lee joins us right now, Bloomberg Markets reporter, to talk about the Fed today. We still expect an increase, Justina, but I think even though WERP shows us 7 25 basis point hikes through February of 2023, the thinking that a recession could happen next year is starting to really gain some momentum.
Yeah, I mean, the Fed is really in a bind here because on one hand, commodity prices have risen. Inflation is at the highest in 4 decades. And so they've got to worry about that. But at the same time, the war has also increased economic risks. And it's really up to the Fed to kind of balance those two, factors right here. And, economists are still expecting the dot plot to show more rate hikes than it did in the last meeting, but still less than what markets are projecting.
Justina, and the other thing we need to talk about today, of course, is what we've seen through the Asia session, this incredible turnaround in Chinese stocks and Hong Kong technology shares in particular. There's a lot of verbal intervention here. I guess we wait to find out whether that's followed up with anything more substantial. But there are also questions we still don't know the answer to. For example, what role will China play in the Russia-Ukraine conflict? How far will lockdowns go in China fighting COVID-19 still? So even with this intervention, and that is the story of the moment, still questions.
Yeah, exactly. But it seems like investors were happy to take, just the verbal support for now, especially since they had been waiting for this all this time. Chinese stocks were plunging. And it really was quite a remarkable message coming from Beijing. Not only did they tell government departments to actively introduce policies to benefit markets, they actually very specifically hit a few pain points, of markets, kind of assuaging these concerns from U.S. listings to, the tech crackdown and the housing market risks.
Yeah, absolutely. Something in there around tech, around property, around all of those different worries on the worry list. Justina, thank you very much. Bloomberg's Justina Lee with the latest on markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. China denies it knew about the invasion of Ukraine in advance. In the Washington Post, China's ambassador to the U.S. wrote that had Beijing known about Russia's plan, it would have tried its best to prevent it. He says that assertions that China tacitly supports the war are disinformation. Fitch Ratings says that Russia could be in default today. The firm says it needs to make the coupon payments on its dollar debt that are due today in dollars. Moscow has said that creditors in countries that had joined sanctions against Russia would be treated differently. Top Republican senators are urging the Biden administration to speed up the delivery of weapons and equipment to Ukraine. They suggested a long list in addition to high-profile weapons such as handheld anti-aircraft and anti-tank missiles. That list includes drones, grenade launchers, and rocket systems. And Pfizer has asked U.S. regulators to approve a second coronavirus booster shot for senior citizens. It's an attempt to protect vulnerable adults when immunity provided by the first 3 doses decreases. Pfizer and its German partner BioNTech submitted data from Israel, which started giving a 4th shot to older people and healthcare workers last year. Because yes, Anna, with everything else going on, we are still in the middle of a pandemic.
Yeah, absolutely. And just the news flow yesterday out of China reminded us of that, didn't it, Kaylee? And speaking of China, further news flow, further verbal intervention in markets from Chinese authorities, certainly something we want to discuss with Manish Singh, Crossbridge Capital's CIO. That conversation coming up shortly. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. In China, stocks soared after Beijing pledged to boost financial markets and stimulate economic growth. Hong Kong's China stock gauge rose the most in 14 years. China is trying to ease investor fears on risks from the property market, overseas listings, and internet companies. President Biden heads to Brussels next week to meet with NATO allies and take part in a European Union summit. Both meetings will focus on Russia's war in Ukraine. Today, Ukraine's president will deliver a virtual address to the U.S. Congress. And the Federal Reserve is poised to raise interest rates today for the first time since 2018. Investors will focus on how aggressive the central bank plans to be in taking on inflation. Meanwhile, President Biden's pick for the top U.S. banking regulator has withdrawn. Sarah Bloom-Raskin failed to gain enough support in the Senate. I'm Anna Edwards in London with Kaylee Lyons and Matt Miller over in New York. And Matt, what is on your mind as we head towards what looks to be a pretty positive session for the U.S.?
Yeah, and I think we're moving so far ahead in futures. It's really interesting because typically traders will sit on their hands until we get the decision. But maybe today is different because we basically know what the decision is going to be. S&P futures up more than 1%, even after the more than 2% positive close yesterday. The U.S. 10-year yield is rising, even though this is red. It may confuse you to see an up arrow and the color red. I'm lobbying to change that. 2.1652 is the level on the 10-year, so relatively high there as investors sell off the debt. The price is lower, that's why it's red. NYMEX crude is up almost 2% here, 98.17, 98.22, still under $100 a barrel, but it's back up again, and Bitcoin is rising today again as well. 2.75% right now, $40,540. Kaylee, what do you see in terms of pre-market movers?
Well, of course, everything we're seeing in the U.S., Matt, follows on those massive gains we saw in Asia overnight on Beijing's intervention to stop the plunge in asset prices there. And that is translating right through to Chinese-listed stocks here in the U.S. The ADRs of the likes of Alibaba and JD.com surging in pre-market trading to the tune of 20% or more in the case of a few other names. And then other Chinese-exposed stocks like Yum China is up 9.9%. And I wanted to point out Tesla as well. We, of course, got the news yesterday that it was raising prices on all of its vehicles. Again, now the cheapest car is just under $47,000. But the market seems to like that exercising of pricing power. Tesla was up nearly 5% yesterday, and it's up another 3% before the bell this morning, Anna.
Something else that is trading strongly today, European stocks broadly across the board responding to, Kaylee, the support, the verbal intervention that we've seen from Chinese authorities around their assets. And so that is spilling through into the European equity trading day. The stock 600 in Europe up by just over 2%. We had a restart to nickel trading. Remember, of course, that nickel trading was stopped on the LME, the London Metals Exchange, just last week. It was stopped because of that massive short squeeze that we saw. They tried to restart it this morning. The restart was supposed to have a 5% limit down limit, but that didn't work properly. Technically, it went a bit wrong. And as a result, we're paused again on nickel trading happening here in London. Prosus, this is another one that's really responding to the China news flow. Prosus owns a large chunk of Tencent over in China. Tencent went up by more than 20% in session in China, and so as a result, the Prosus share price in Amsterdam up by 20%. And EQT, this is more M&A news, which is gradually coming back into these markets, such volatile markets because of the war in Europe, of course. EQT is a private equity business in Scandinavia. It's buying another private equity business. In fact, it's the biggest such PE deal that we have ever seen. As a result, that stock up by just shy of 8%, Kaylee.
All right, Anna, a lot going on today, and it's going to get even busier this afternoon because the first Fed rate increase since 2018 is imminent. The FOMC will almost certainly hike by 25 basis points today, but inflation is surging and uncertainty around the impact from the war in Ukraine complicates the case for faster tightening. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now for more. So, Mike, is it fair to say it's not so much about the actual hike today, it's about everything else we hear from the Fed?
Yeah, we know what the what is. The Fed is going to raise interest rates by 25 basis points today. Chairman Jay Powell told us that. It's the what's next that really matters. We're going to get new economic projections from the members of the Open Market Committee, and we're going to get a new dot plot. And then we get Chairman Powell explaining it all. And you look at the dot plot, and it basically going into the December meeting or coming out from the December meeting, the market was pricing the long-term rise in rates lower than Fed officials were, and now they're pricing it significantly higher. So does the Fed go up to meet the markets? How far do they go? And also watch the dots on the far right of the dot plot when you get it, because that's the terminal rate. Do they raise that? Do they think we need to go over 2.5?
Now, we don't need to talk too much about Sarah Bloom Raskin herself. She's withdrawn. But the two questions I think that are important, who will replace her in terms of a nomination? And will Sherrod Brown, senator from the great state of Ohio, actually disengage that confirmation from the others? Because they still all have to go forward.
Yeah, he's going to vote on the 4 nominees who are still left. Of course, Jay Powell being one of them.
Yeah.
Quite important to get that through. Also, Lael Brainerd, Philip Jefferson, and we're looking at Lisa Cook to join the Fed. That'll probably happen fairly quickly, and they've got some Republican support. As to who replaces Sarah Raskin, that's a good question, because it's proving very hard for the president to get a progressive into that seat. His OCC nominee had to withdraw because Republicans opposed her, and also now Sarah Raskin. The problem for the Fed is this delays a lot of important things going forward. If they don't get somebody into that seat, we're going to be looking at problems with bank mergers and acquisitions, stress tests, how strict are they going to be? The supplementary leverage ratio is a big deal to the banking industry. That's going to sit on the sidelines. And of course, with Raskin's withdrawal, they kind of push climate change out of the picture.
Mike, thank you very much. Bloomberg's Michael McKee with the latest on what we should expect from the Fed today. For more on the Fed's path ahead, we're joined by Manish Singh, CIO at Crossbridge Capital, with us on set here in London. Manish, very nice to speak to you this morning. There's a lot to talk about this morning. War in Europe, of course, on everybody's minds. Clearly, there's a lot going on in Chinese equity markets in the last few days, and certainly this morning. But let's linger on the Fed for just a moment, because to Mike's point there, do you think that the market is going to have to come down to the Fed's way of seeing things in terms of the number of hikes that are priced in, or will the dots take a jump to the upside? Will we see the Fed's dots come up to meet the market?
So I think the market will have to come down from what I see. So the Fed fund future rate at this time, as you know, is pricing 6.8 hikes of 25 basis points. If you look at the PPI number that we got yesterday, I mean, we are already seeing signs of slowdown. So as per me, I don't see how we can get more than 3 to 4 rate hikes this year, because I think that we are seeing, as I'm not forecasting we'll have a recession, but I think we have a slowdown coming, and that will stop the Fed in its tracks.
And do you think the Fed will have to do less because financial conditions have tightened a bit already?
Yes.
We can debate how tight or loose that leaves us on financial conditions, but is that part of the rationale?
Absolutely. I mean, if you look at when we got the 7.5% CPI print, I mean, look where the 2-10 spreads are going. It's been going down. We got 7.9, it's going down. So I do not think that the market, at least, you know, from what we are seeing, it believes that you can have these many rate hikes or the market will be able to sustain that. And I'm looking at the data. When I look at data, I see a slowdown coming, and that will be the reason that Fed will use to say, well, we don't have to, because inflation is not as big a problem that we thought it would be.
Yeah, Matt, jump in.
How much of a slowdown, Manish? I mean, Do you see the probability of a recession at more than 50% in 2023? I know Goldman Sachs recently said 35%, and it just seems so low considering the huge gain in commodities prices, the fact that the yield curve is so flat at a time when the Fed is expected to raise rates 7 times into February 2023.
So I don't think that the probability of recession is as high as that. And therefore, I was pointing out to the 2 data I saw yesterday. So if you look at the PPI and the producer, because the input price finally makes it to the consumer as well, there if you see the goods in less energy and food, that is up 4.1%. Now, this number was growing at over 10% in middle of the pandemic. If you look at also the Empire manufacturing numbers and the difference between new orders and inventory, the new orders are, I wouldn't say collapsing, but it's falling fast. So there is an adjustment going on. We'll see what the Fed says about financial conditions. So far, they have used the word it is accommodative. They have used the word that economic strength, it continues to be economic strength. These are 2 things that I would like to see in Fed statement, and that gives me a cue where we are heading and how fast and how far Fed can go. But as I said, I do not think that we are going to get 6, 7 hikes.
Are we in the middle of a pandemic? I had to take issue with that.
Technically, yes.
In the Western world, certainly this is endemic now. Aren't we through with this? We're not wearing masks. We're getting back on planes. We're staying in hotels. We're not wiping everything down. Isn't it over?
Well, if you look at this morning when I came on the tube, it was packed. So I think that the pandemic is not there, and it's endemic. So if you look at you try to get a booking for a restaurant for dinner in London, I mean, you'll find it hard to get booking on Thursday and Friday. So I think it just tells you that these things are over, and it is endemic, and people have decided they will have to live with it.
Well, but that's not true.
Wait, what's the technical definition of a pandemic?
Ask the WHO, Matt.
Okay.
I'm not a biology or epidemiology expert, but I will continue to ask Manish about the markets, because one place where the pandemic, or at least COVID-related restrictions, certainly isn't over is China. We saw that borne out this week, and yet you also have China stepping up, saying they will support financial markets. How do you view that the moves we saw from Beijing overnight?
I think it was extremely positive. And as I wrote in my note, I really get concerned when the US and China, they don't talk to each other. Now, the fact that they have been talking, and we had one round of discussion in Rome that we saw, and the statement from Vice Premier Liu He is very far-reaching, because he is not only mentioning about stable market, he's also saying that the US and Chinese regulators have been talking about offshore listing. They are going to promote offshore listing. He's also said that monetary policy should be eased. These are extremely positive. So these discussions are going on. And I think China is also taking note of what happened to Russia. I mean, Russia prepared a fortress by getting off US Treasury, and look what happened. I mean, it just collapsed on a weekend. So China has to be extremely careful, because US is a massive buyer of Chinese goods, and buyers do have a lot of potential, as we saw in that, and also we saw in Brexit discussions.
Manish, thank you very much for your thoughts. Good to speak to you this morning. Manish Singh, CIO at Crossbridge Capital. Coming up on the program, we will stick with war in Europe and get further perspective on that. Elizabeth Braw, American Enterprise Institute resident fellow, joins us shortly. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
They are making absurd claims about biological labs and chemical weapons in Ukraine. This is just another lie. And we are concerned that Moscow could stage a false flag operation, possibly including chemical weapons.
NATO Secretary General Jens Stoltenberg briefing the press earlier from Brussels. Joining us now is Elizabeth Braw, resident fellow at the American Enterprise Institute. Elizabeth, thanks very much for joining us. It seems we have a fairly good understanding at the moment about where NATO will and won't go. At least there's been some disagreement around that, and that has clarified things. Do you think that is a moving piece, though? Do you think that the NATO response here is and will evolve? And if so, do we have to wait for next week for that when we see President Biden in Europe?
Yeah, so what has happened with NATO's response is that it has said very clearly that it's not going to intervene militarily, but to intervene militarily is a sort of a gray zone. Does it mean not sending? Does it only mean not sending your own troops? Does it also mean not sending weapons? NATO member states have sent weapons, and then, of course, last week the issue came up of would the Americans help the Poles donate their MiGs to Ukraine? In the end, the Americans said no, they didn't want to take the risk of becoming more closely involved with this conflict. So it's evolving, but.
Elizabeth, I spoke with, yesterday on Bloomberg Radio, we spoke with the assistant deputy of the defense ministry in Ukraine. And he said, look, if you give us the MiGs, if we just get the hardware, we can institute a no-fly zone ourselves. We can operate those aircraft, and we can ensure that Russia doesn't gain the advantage in the skies. That's all we need is just the gear. So if we're already sending them, thousands of anti-tank missiles, why don't we send them the planes as well?
That's a legitimate question, and clearly the question that the Ukrainians are asking, and indeed the Poles. So the question is, who is going to assume the risk? The Poles are willing to assume the risk, but not by themselves. And somebody has to team up with them to essentially share the risk. And nobody wants to be that country. It really has to be a major NATO member state, i.e. The United States. And the US isn't willing to sort of assume half of that risk. So it's either everybody or nobody. And the Poles are just not going to do it on their own. So that is sort of the catch-22 situation. Also with regards to the MiGs, they alone really wouldn't close the Ukrainian skies, as we saw with the attack on that military base near the Polish border. Those aircraft didn't even fly into Ukrainian airspace. They remained in Russian airspace. So Ukraine wouldn't be completely safe even if somebody managed to close our skies.
Elizabeth, is Russia just reusing its playbook from Syria? And if so, how should the West respond differently now that it's Kyiv and Kharkiv and not Aleppo?
The sad discovery of this war is really that Russia was practicing in Syria all these years, and we didn't really pay a lot of attention, we as Europeans, because it wasn't on our continent. Now it is on our continent, and the Russians have practiced and developed some skills, some destructive skills in Syria, and they are using them because their first plan, Plan A, to swiftly capture Ukraine didn't succeed, and now they are resorting to Plan B, which is very bloody, almost paradoxically, at the same time, it's conducting negotiations with the Ukrainians to establish a potential ceasefire. So really a very bloody situation.
Well, Elizabeth, as you talk about Plan B, do you think realistically that might include chemical weapons?
It's very hard to tell when the leader of Russia is as irrational as he is. This war makes no sense, no rational sense, because it's damaging Russia enormously, not least economically. But Putin seems to have succumbed to irrationality, and as a result, it's very hard to say whether or not he'll use chemical weapons. He's clearly not in the business of worrying about loss of human life on either side. We should remember that thousands of soldiers on the Russian side have already lost their lives in this really quite unnecessary war.
Is this why we're so adamant that there aren't any bio labs in Ukraine, even though the Undersecretary of State Victoria Nuland testified in front of Congress that there are, in fact, biological research labs in Ukraine? Is that why we're being so sort of over the top about our denials?
So the challenge with biological labs is that they can exist for entirely peaceful purposes. Every country conducts biological research, virological research, as we saw with China. They had in Wuhan this lab that then became almost infamous as a sort of suspected source of the COVID outbreak. I think that has still not been established where that COVID outbreak came from. But nevertheless, countries conduct biological research not to create weapons in most cases, but simply for medical reasons. And in the case of Ukraine, during Soviet times, the Soviets did have biological labs for military reasons, and then came the end of the Soviet Union, and somebody had to convert those labs into something more peaceful, and that's where the Americans came in and helped the Ukrainians and others to convert those labs, and that's why they still exist. But it's very hard to sort of explain that long story to counter Russian propaganda that makes it seem like Ukraine is developing biological weapons.
Elizabeth, thank you very much. Thanks for bringing us your thoughts. Elizabeth Braw, resident fellow at the American Enterprise Institute. Coming up in programming, we'll be speaking to the former U.S. ambassador to Georgia, Ian Kelly. That's at 8 a.m. in New York, 12 p.m. London time. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think the biggest thing that's happened in the last 10 years in lots of ways, maybe longer, is when Europe and the U.S. said, hey, Russia, those reserves that you thought were yours, they're not really your reserves. So what does that mean? It means the dollar or treasuries as a risk-free asset isn't so risk-free. It's not risk-free if you're Russian, and maybe if you're Chinese, you're like, it might not be risk-free either.
That was Galaxy Digital CEO Mike Novogratz speaking with me and Kaylee yesterday on Bloomberg Crypto. You can catch our news show every Tuesday. I'm going to go against Anna on this one and say that Tuesday is the best day. The best things happen on Tuesday, including our show every Tuesday at 1 p.m. It's improved, right? Definitely recommend you tune in. We've gotten a lot of really positive feedback on Twitter, on LinkedIn, and we learned a lot as well from Mike Novogratz yesterday. Now, with that said, let's get to Tom Keene, co-anchor of Bloomberg Surveillance. It is Fed Day. We're going to see not only
the worst shameless plug I think I've ever seen. Anna, my deepest sympathies. I don't know how you do it.
I was going to move on to plug The Fed Decides today, your aptly named special that starts at 1:30 p.m. And the most important market event of the day from that time on, for sure. But for now, it's really China, right? They've almost issued a kind of whatever it takes memorandum.
Yeah, I like that. I think the whatever it takes really captures the moment. There's three major stories going on. Of course, trumping all is the Zelensky speech to Congress, I believe in the 9 o'clock hour across all of the Bloomberg world. And yes, there'll be a Fed meeting in China as well. Let's look at a chart very quickly here. This is one measure of China. I've done this the way I look at it, not on TV. Usually I'd have a white line, big and bold for TV, but this is what's called a candle chart, and it shows you the more nuanced slope of the Hong Kong index, the Hang Seng, back to the time of JFK and the beginning of Vietnam. And the answer is there was a Hong Kong boom. And then, Matt, there wasn't. And Hong Kong goes flat, slope matters, and we rolled over a little bit, not quite to where we are in Hong Kong in the crisis of 2008.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much, and looking forward to your coverage of the Fed Decides later today. And on Surveillance, I know you'll be joined by Ellen Zettner of Morgan Stanley, so looking forward to that conversation as well. Meanwhile, we continue, Anna, to get headlines out of China. The China Securities Regulatory Commission encouraging listing firms to step up share buybacks so that intervention continues. A big market story of the day, Anna.
Yeah, absolutely. So we continue to watch these lines coming out of China. Paul Dobson, our colleague, talking about this being a Draghi moment, the whatever it takes moment from China. How long does it last? This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Has a job to do. It's risk managing inflation from well above target.
They're trying to fight inflation, and inflation's just gotten worse, seemingly.
The Fed wants growth to slow some. They think it's growing faster than is sustainable, but they don't want to overdo it.
I think it's very reasonable to expect that we could see an acceleration in the Fed's hiking cycle.
The Fed absolutely has to start hiking, if not for any other reason than it needs to maintain some credibility.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up more than 1% on the S&P. TK, what a day we've got lined up today.
It's a huge day, beginning on the Pacific Rim in China. Yes, that Fed meeting this afternoon, but I'm sorry, John, this moment near the 9 o'clock hour today will be something interesting to see as the gentleman from Ukraine, a la Churchill of 1941, addresses Congress.
Addressing Congress, Tom, and no doubt we'll get a standing ovation at the end of it. There'll be some asks in that address. I wonder whether this White House can deliver them.
We're going to cover that today, and the asks have to do with the allies, and this is starkly different than the beginning of World War II and the shock of America directly in the war. We are distant, John. I think that's the reigning theory of the moment, but it's something we're going to have to monitor. Maria Tadeo and Marie Horton with us. But again, the Fed meeting folds into it as well.
And Lisa, this is the elephant in the room for the FOMC today.
Yeah, very much. How long this conflict is going to persist and what the effect will be on commodities. How much are they going to message around that whipsaw that we've seen in oil prices, considering the fact that you're still seeing that effect in gasoline prices, but we're back to where we were before the conflict even started. How do they even begin to address this, John?
Never mind the whipsaw in crude. Look at the whipsaw in Chinese equities. This line from the government. Government departments should, quote, actively introduce policies that benefit markets. From China today, and the move on the Hang Seng, the CSI 300, absolutely flying.
I love this. Plunge Protection Patrol back in force, full force, and here is the support for markets that a lot of people were hoping for. How much does this actually edify this feeling that China is the place for a lot of investors to go because their central bank and their authorities are moving the opposite direction from the U.S. and Europe?
It gives this equity market a lift as well. Let's whip through it for you. S&P 500 futures up 44 points, advancing a little more than 1%. On the NASDAQ 100 at 1.7%. Tom, looking at yields up a couple of basis points on 10s at 2.16.2s. The last time the Fed met, January 26th, they closed at 115. Look at where they are now.
Correlated sigh of relief today, and with those higher yields, John, you've got curve steepening, and I'm sorry, it is modestly substantial, up to 31 basis points. That's a massive sigh of relief, and even the real yield, which is critical, we'll talk about this coming through the show today, and what Lawrence Summers says in a fiery essay. John, negative 0.70 is a long way from 10 days ago.
Lisa, your 2-year, 1.85.
Yeah, right now we are pricing in a lot of work for the Fed to do today. We'll get to that, but another thing that I'm watching today is a slew of economic data coming out of the United States, really pointing to two sides of the same coin. How much do consumers keep spending when their base costs are increasing to such a high degree? We get at 8:30 a.m. February retail sales. The expectation is pretty modest, considering the fact that you're getting that bounce that was in January fading over, and you have people dealing with prices of gasoline rising to the highest level since 2008, and of housing costs rising to the highest levels going back probably in history. In most regions around the country, in some areas, urban areas, they've been a little bit slower to pick up. And then we get that housing data at 10 a.m. How much is this crimping consumers' ability to go out and keep spending? 9 a.m., Ukrainian President Volodymyr Zelensky is addressing both chambers of Congress. What is he asking for? He is asking for more air support and possibly that no-fly zone. Very delicate balance. And frankly, you are seeing some more fractures within Congress, with certain Republicans in particular coming out and saying, we need to do more. We need to supply more, and we need to have a harder line when it comes to countering Russia and supporting Ukraine. And at 2 p.m., we get that Fed rate decision, the first rate hike expected in quite a number of years. 2015, they began a rate hiking cycle that they ended shortly thereafter. It didn't get very far. Today, as Tom was pointing out, you are seeing this feeling in markets that they will have to raise their terminal rate much higher than they have in the past. 10-year yields at the highest level since 2019. And I'm watching this as we price in, John, 7 full rate hikes by the end of this year.
What does a hawkish meeting look like today, if that's what we're already pricing? Now, Tom, you know how this works. You get the statement, and that's where the decision is. You get the summary of economic projections, that's where the forecasts are. Then you get the news conference, and that's when the chairman gets to choose what to emphasize and what to de-emphasize. I wonder how that plays out a little bit later.
We had a lesson on this from Lagarde. ECB, it came out wicked hawkish. Marcus, wicked move. John, you monitored that more than I did, but then Lagarde walked it back, didn't she, through the press conference?
Well, the forecasts are going to be interesting here, Tom, because a la ECB expecting a cut to growth, a lift to the inflation forecast, and then the dot plot. It's the dot plot I'm interested in. And to Lisa's point, if that gets a kick higher, a big lift, does he choose to emphasize the dot plot or de-emphasize the uncertainty? Because of the uncertainty, John, de-emphasize where those dots are.
I look at the dot plot like I look at the midfield.
You want it gone. I know you want it gone. You want it gone.
You know, it's like analyzing the midfield of the tots. It's not going to work.
I would have thought, Tom, that he'd like it gone too on days like today. Do you think they want to put out forecasts today?
I think many people, I defer to Mr. McKee on this and to our good guests, including Ellen Zentner, coming up. I think many people, solid PhDs at the Fed, would kill to walk away from the silliness of the dot plots.
Mike McKee leading our coverage a little bit later this morning and through the day. Special coverage of that Fed decision on TV and radio coming up a little bit later. Team coverage starts right now with Bloomberg's Anne-Marie Jordan in Washington, Maria Tadeo in Brussels, and address to Congress a little bit later. AMH, what are we looking for?
Well, it's going to be incredibly emotional. President Zelensky is going to really make an impassioned speech trying to implore Congress to move the needle and pressure the administration about a no-fly zone. We can say this because this is what he has been doing across Europe as well as Canada most recently. When he spoke to European leaders, it was so emotional. His translator choked up. And then in Canada, he really was trying to implore Canadians, these lawmakers, to really feel and understand what is going on the ground in Kiev. And what he said is, can you imagine bombs going over Vancouver? So he's going to call for no-fly zone. The issue is the administration does not want to do that at this moment. They view that as escalatory, but potentially he can move some lawmakers to put pressure on the administration to at least get those Polish jets over the border.
Anne-Marie, there is headlines coming anew, and they are of the Atlantic and the United States and the United Kingdom, but there is a stunning headline from Japan where Mr. Kishida says they will strip Russia of most favored nation status. That's not a small item involving Japanese cars and trucks. Anne-Marie, is this a concerted effort by the president?
It has been by the president, by NATO allies, to make sure that it is not just West, they are also including their partners in Asia. The first one being Singapore was the first one to come out and really get alongside the United States in the sanctions regime. It also means that there's pressure growing on China when you have other Asian countries and leaders like Japan, Singapore, these hubs of trade and commerce, that are also taking steps to make sure they isolate Russia and President Vladimir Putin.
Maria, what's the latest when it comes to those meetings from Eastern European leaders with President Zelensky, especially given the fact that they were heading into war zone? What's come of that?
Yeah, and you know, Lisa, they're now back home. I have confirmation of that. The three delegations, remember the Czech Prime Minister, the Slovenian Prime Minister, the Polish Prime Minister, they are now back in their respective countries. I actually had the opportunity to exchange very quick, brief messages with the Slovenian Prime Minister, Mr. Janša, who told me, you know, it was, of course, a risky move, but they wanted to send a very political, strong signal that this is where Eastern European countries have to be supporting Ukraine, and also repeating that the situation for journalists on the ground is actually very, very dangerous at this point. Now, the question here, and to me, what really has changed over the past 24 hours is the language coming out of Ukraine, and in particular, Zelensky. And you could argue this government in Ukraine has had a major reality check when it comes to NATO, where they now concede almost publicly this is not going to happen. They're not going to be able to join the alliance. And this opens up a whole space of negotiations, possibly with the Russians. Remember, the Ukrainians had said we can talk about neutrality, but we need major security guarantees. If there's no NATO, we need other forms of security guarantees and formats. So that is where the discussion does seem to be heading that way, moving away from NATO, going into something perhaps that looks neutral with additional security guarantees.
You know, I've got 18 questions here, and we're going to have the two of you through the morning up to the Zelensky speech and frankly beyond. Maria, let me go to you with one simple question. Have the Russians eased up at all?
Well, on the ground, they haven't, and we're seeing that reality really hitting still places like Mariupol. This is now a real human tragedy, particularly when you look at the amount of people that are trying to leave that city. Remember, it connects Crimea to the Donbass. The other big flashpoint is the capital city, Ukraine, which is now on lockdown for 36 hours. Nobody can leave, go on the streets. Again, all of this in preparation for what could be the biggest attack on the Ukrainian capital. When you look at the language, yes, we heard from Sergei Lavrov today, repeating, saying we could be close to a deal, but a lot of this will depend on Ukraine. But Tom, the reality is the Russians say one thing, but they do the other. For the Ukrainians, what really matters is that ceasefire on the ground.
Maria, thank you. Maria Tadeo in Brussels, AMH in DC. We'll catch up with the both of you, as Tom said. A little bit later, going into that address to Congress by Ukraine's president a little bit later this morning. Futures are up more than 1% on the S&P at the close today, a massive move in the Chinese equity market. This line right here, government departments should, quote, actively introduce policies that benefit markets, and then we start to see some action. This line coming out of China just moments ago, a report citing the finance ministry saying that China will not expand its property tax trial this year. Tom, that's some action. We're looking for a little bit more, but they're looking to support a market that's had a bit of trouble over the last few months.
I have Liz Economy's book at home, which I'm wading through, on her wonderful and authoritative view of China. And it hasn't happened yet, John, but Liz Economy is going to have the greatest call in the history of international relations if President Xi's power wavers into this huge political moment this autumn. It bears close watching, the domestic issues of China.
China stepping in just a little bit, Lisa, overnight.
Yeah, and it really speaks to this uncomfortable balance they have, continuing their deleveraging trend, which seems to be tabled and then absolutely reversed, while also maintaining stability heading into a very important period for Xi Jinping.
It is Fed decision day, and we have a difficult decision for this FOMC. The easy one, hike interest rates. The hard one, provide some forecasts and talk about the path forward. Good luck with that. Futures up 46 on the S&P, up a little more than 1%. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Now we're going to start in China. Stocks surged after the government promised to boost financial markets and increase economic growth. Hong Kong's China stock gauge rose the most in 14 years. China is trying to ease investors' fears on the risks from the property market, overseas listings and internet companies. Top economic leaders have also said that new loans will grow appropriately. Now Ukraine's President Volodymyr Zelensky will deliver a virtual address to the U.S. Congress today. He is expected to plead for more aid. Congress just passed a spending bill that includes billions for Ukraine, but the U.S. and NATO are hesitating at another of Zelensky's requests, a no-fly zone over Ukraine. British Prime Minister Boris Johnson has just begun a trip to lobby the United Arab Emirates and Saudi Arabia on oil. He'll try to persuade the two countries to step up production and ease pressures on energy prices. Johnson's visit is part of a bid to end Europe's reliance on Russian oil and gas. Fitch Ratings warns that Russia could be in default today. The firm says it needs to make the coupon payments on its dollar debt that are due today in dollars. Moscow has said that creditors in countries that had joined sanctions against Russia would be treated differently. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Inflation.
Highest since 1982.
War.
This is the central banking nightmare because there is no good answer.
Everyone is eyeing the Fed's next move.
We are getting whipsawed.
I think they have to move. Trust Bloomberg for the fastest coverage and exclusive analysis.
If the market is pricing 50 basis points, the Fed should walk through that door.
Look for massive adjustments.
It's going to be a very delicate task.
Bloomberg Surveillance. The Fed decides. Today on Bloomberg. The fastest way to stay one step ahead.
The President will travel to Brussels, Belgium later this month, where he will join an extraordinary NATO summit on March 24th. His goal is to meet in person, face-to-face, with his European counterparts and talk about and assess where we are at this point in the conflict. In terms of a meeting with President Zelensky or an engagement with President Zelensky, we're still finalizing the trip at this point.
Jen Psaki there at the White House. Looking forward to a meeting between the President of the United States and European allies, perhaps late next week. The story of the moment, futures, extending gains at 1.3% on the S&P, on the NASDAQ right now, up by almost 2%, up by 1.9%. This headline from the Kremlin, Tom, a neutral Ukraine, a possible compromise solution, discussing an Austria-Sweden neutrality model for Ukraine. Austria and Sweden, of course, two members of the EU who are not members of NATO. That seems to be where we might be able to have a compromise, Tom, at least from the Kremlin side this morning.
John, these are the first legitimate headlines I see, and I'm sorry, I link it directly into the financial, as Greg Vallier says, the financial screws that are being put on Mr. Putin. Let me go through the list here on the wonderful NATO document. Austria, Switzerland, Sweden, Finland, Ireland. Austria's 1955, coming out of World War II, with picking up the pieces of Hitler, and Sweden goes back to 1834 with their statement of neutrality in King Gustav. John, these are serious issues for these nations to say, no, we're neutral. Maybe Ukraine finds a path.
These headlines from Russia this morning, building on the line we had from Sergei Lavrov, Lisa, earlier on from the foreign minister, Ukraine's neutral status is under serious discussion. Talking up talks. We've heard this a few times over the last week.
Yeah, although we actually have heard a more constructive tone from the Ukrainians as well, that there does seem to be some progress with the Russian delegates, which makes you feel like perhaps there is something going on, and maybe that's the reason for this persistent, more positive tone.
A small lift off the back of this, Tom. Equity futures on the S&P up 1.3%.
I'm going to say there is a lift, and we'll go with that. In the huge news flow of today, we're going to keep our eye on the markets. We do this with John Stolfus, Chief Investment Strategist, Oppenheimer and Company. Thrilled that he could join us today. John, in your research notes of the last year through the pandemic, you have been the optimistic one. The glass is more than half full. Sustain that this morning.
Well, thanks, Tom, for having me on the show today. I got to say, all eyes on the Fed for 2 p.m. It's the start of a new hike cycle, apparently. It would be a real disappointment.
Company incorporated on Bloomberg.
I don't believe it. That's my AI, my Bloomberg AI alert going off. Sorry about that.
No, we like that. Let's stop the show, folks. This is a window into what adults do in the real world. Stolfus is Global Wall Street, and he's using every tool Bloomberg has so he can day trade in front of his clients. I'm kidding, of course. John, pick it up, please.
Okay. Well, Tom, we're looking for the Fed to raise. We think it's going to be, it'll be 25 bips. If they do 50 bips, I think the market could throw a semi-tantrum, be ungrateful for that. I mean, the market was looking for 50 bips originally. Now, 25 looks like about it with all that's going on in Ukraine, the situation stalling the opening of ports in China with COVID, and just the general difficulty with the global supply chain slowing our economy. I think the Fed is being aided and abetted by the global situation in a way, and this should start out modestly and very sensitive, we expect.
Right now, John, we're looking at a market that's pricing in 7 rate hikes, and I'll allow you to listen to the AI that's probably telling you the same thing. Is that realistic, given all of the exogenous shocks, given the fact that people are concerned about a consumer slowdown in spending?
You know, we've got to say the consumer has really shown, while the U.S. consumer has lost some momentum in terms of sentiment, they're still shopping. You know, what they tend to do. I don't like to go against the U.S. consumer, because it's just that they sort of downgrade what they're shopping for in the process, or slow somewhat. I think the consumer is more sophisticated than he and she have ever been before.
Okay, so they might be more sophisticated, but I guess, does it change your view of markets? Does it change your optimism if the Fed goes 7 times, or is that basically your base case, and that you think that there's enough resilience to get past that and still have a soft landing?
Yeah, I think we've got enough resilience for a soft landing on the soft side. We could have some bumpiness here, okay? But we think the Fed's going to raise 4 to 6 times tops, because it will be very much helped by just the slowing that's coming through the system based on what's going on around the globe. You know, the frothiness has been taken out of the equity market, out of the bond market. Things are much healthier now, I think, than they were just 3 months ago.
Hey, John, always great to catch up with you. The constructive view from John Stolford's there of Oppenheimer. Your equity market has a lift. Stateside up 1.3%, in Europe much more so. Looking at Brent, we dive lower, 98.38 and down 1.5%. Tom, I'll get you the headline from about 10 minutes or so ago. The breaking news from the Kremlin: a neutral Ukraine with its own army is a possible compromise. Just one of the headlines we had this morning from the Kremlin.
I'm busting Farrell's chops today, folks, on dive, but the answer seriously is a print of 97.40 would be through the intraday low seen. John, I can give you the exact time on that, 7:21 yesterday.
Discussing an Austria-Sweden neutrality model for Ukraine, Lisa. And again, I'll go back to what Foreign Minister Sergei Lavrov said earlier this morning, that Ukraine's neutral status is under serious discussion.
And this builds on what we heard from President Zelensky of Ukraine, saying that talks are, quote, more realistic with Russia. So again, both sides, and this is something you pointed out earlier, John, we have to hear from both sides. There's a lot of messaging, a lot of propaganda. Both sides seem to be coming out and suggesting that there is progress, and the hope is let it happen before this escalates into something bigger.
Yeah. And then, Lisa, again, something we've done time and time again over the last few weeks, Tom, just comparing the words, the rhetoric, the dialogue, with the action we're seeing on the ground.
Yeah, my amateur take on this, John, and we'll get great perspective through the day on this up to the Zelensky speech, is the idea that the financial pros are telling us these financial constraints against Mr. Putin are tangible and real, and the political pros are telling us you always need to give the idiot a way out. In this case, the idiot is Mr. Putin, and to save face, he needs a way out.
But to your point, John, the images that we see every single day coming from Kyiv, from Mariupol, all of these images, and people who are trying to leave, who think that they have humanitarian passages, and then who get shot at, really raises questions about what you can trust.
This is why it's always difficult. The market's trying to live in the future, and this morning it's hoping for a better one. Futures up 1.3 on the S&P. The news out from the Kremlin supportive of this market, this rally, at least for now. Throw in China, a little bit of verbal intervention on the market side, and you've got a lift across the board, worldwide, from New York City, on TV and radio. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Happening just moments ago, the Kremlin coming out and saying a neutral Ukraine is a compromise option. Now, is that with the current leadership or with new leadership? They're the details we need, not just from the Russian side, but also the interpretation of that line from Ukraine. Futures get a lift this morning, up 1.26% on the S&P, on the Nasdaq up 1.83%. In Europe, a tidy rally as well, off the back of some comments in China. The verbal intervention continues. They want to actively support this market. All government departments, everything they should do, should actively support this market. I think everybody heard the message, loud and clear. Switch up the board and get to the Hang Seng. Look at the CSI 300. The move of 9% on the Hang Seng, on the CSI 300 at 4.32%. Monster rally in China, follow through to Europe, and a lift here in the US as well. We've got to push forward to the Fed. Let's look at 2s, 10s and 30s in the bond market. And think about this. 2s were at 115 the last time the Fed met at the close. 10s were at about 185, 186. Look at where 2s are now. 185. Tom, 2s are basically where 10s were the last time this Fed met. We have done a lot of work since then.
That's really, really a nice way of putting it, where you've got different maturities with an equivalency of yield meeting to meeting, and you wonder, John, where it is May 4. John, on China, and I think this is a headline beneath the radar, which shows a different tack. Mr. Kishida speaking at great length in Japan. This is the Prime Minister of Japan, the new Prime Minister. John, Japan will, quote, end virus quasi-emergency nationwide March 21. So Japan on COVID takes a different tack than what we're seeing in China.
That's the direction of travel from Japan, seemingly from Europe, much more so from the United States. And Tom, as you point out, not from China. The lockdowns, I wonder how much the lockdowns have hit crude, Tom, as much as these talks have between Russia and Ukraine.
Absolutely. I mean, this goes to this phrase demand destruction, which I'm not a fan of, but clearly we're modeling out, as I've said time and time again, it is remeasurements of economic growth, and we'll get to that perhaps with Ellen Zentner. But the idea here, John, of the measurement of growth coming from demand destruction from higher oil is tangible.
Can I finish on this, Tom? Just the spread between 2s and 10s. Last time the Fed met, about 70 basis points. Look at it now, in at around 30. Big change, flatter curve.
We'll leave it there on a busy news day with a good day to check there. And again, the VIX 28.57, distant from 35, a better market. Lawrence Summers was with us the other day, the Secretary of Treasury, and obviously from Harvard University. And he wrote a blistering essay today in the Washington Post. And we will begin with that with the wonderful Ellen Zentner of Morgan Stanley. The Fed has not internalized the magnitude of its errors over the past year, is operating with an inappropriate and dangerous framework. Professor Summers with Alan Stomash goes on to say there can be no reliable progress against inflation without substantial increases in real interest rates, which mean temporary increases in unemployment. Ms. Zentner is with Morgan Stanley. Alan, you know that the word magnitude is used differently by people like Zentner, people like Summers. How hard is it right now to gauge the magnitude of this moment, this March magnitude? How hard is it to gauge the how muchedness forward for you?
The how muchedness, I love it. So look, it's easy to get on the train of saying the Fed is behind the curve. And I think there are folks on the FOMC that would agree that they're probably behind the curve. But there are enough risks in the economy still, and with renewed new geopolitical concerns, that it does make sense to start off with a 25 basis point hike. You don't want to add to the volatility that's already in the markets. I think what we're going to see is that Chair Powell is going to leave the door open to be sure that markets know that they can go in bigger increments at any time. But to say that the Fed is operating under the wrong framework, I think is just absolutely inconsistent with what we've heard from the Fed. I think it was pretty quickly that they abandoned the new framework when they went solely to focusing on inflation. So I don't think they're operating under that old framework, or the 2019 framework or 2020 framework.
And the headline there is Zentner pushing back against Summers. Ellen, I want to stay on magnitude, which goes to the reaction functions of the Fed. Can we have any predictable reaction functions given the mix of economic data, the dynamics of the American system? Or are we literally, with Chairman Powell, flying blind out of this pandemic with the overlay of war in Ukraine?
Yeah, so, I mean, flying blind is a good way to put it. I think under this environment, it's absolutely appropriate to expect high volatility to continue. Volatility equals uncertainty, and it means that you have monetary policymakers that are going to have to make decisions meeting by meeting based on the data that they have in hand and where they think it is likely going. When you're following financial conditions so closely, and when those are being impacted, not just by your own communication, but of late by external sources, it's out of your control, and you just really have to watch and take it step by step, feel your way in the sand with your toes. And that's what the Fed is going to be doing. And so I think Chair Powell is going to underscore that in his Q&A session today. And that means that markets are going to have to really be nimble, as the Fed is going to be nimble, that you could see 25 basis points, 50, 50, or all 25s, or what we do know is that they're hiking. The hiking cycle has begun, and there is a lot of room for them to get far in rate hikes without impacting the economy. And I think that's what is most misunderstood by the market.
Well, Ellen, to that point, let's put some numbers on that you expect we're going to end the year of 2023 with a base Fed funds rate of 2.625%, well above where the 10-year and, frankly, the 30-year are at this point. And you also expect quantitative tightening, not just a cessation of purchases of bonds, but actually the shrinking of the balance sheet to begin in May. So here's what I'm struggling with, Ellen. If this is actually going to be effective Fed tightening, why will that not translate to a slower growth paradigm that could potentially slow the trajectory of their rate hikes?
Yeah, so it's a great question, Lisa. So they do. So here's the part of Summers' op-ed that I do agree with. Basically, he's laying out in a way that the Fed can't. That their other job is to raise the unemployment rate. Now, it doesn't sound very good for policymakers to stand in front of the public and say, hey, we need to raise the unemployment rate. But that's part of their job. They have to create slack, and to create slack, you've got to slow the economy. So we do have the economy slowing, and we've taken growth forecasts down for this year and significantly raised inflation forecasts. But the economy is still growing well beyond its potential, which is in the 1.5% to 1.8% range. And so you are still going to put downward pressure on the unemployment rate. At the very least, toward the end of the year, we should start to see the unemployment rate flatten out. If it doesn't, as policymakers have warned, then you could see an unemployment rate in the high 2s, and that's still going to mean that the Fed has a lot more to do. So I think in order to slow the economy and help inflation cool, they are going to have to hike as much as we believe. And again, you all mentioned that the market is expecting 7 rate hikes this year, 7 25 basis point equivalent. We're expecting 6 25 basis point equivalent. It's really in 2023 where we expect 4 additional hikes to get in that range of 2.5 to 2 3/4%. That's where the market has it wrong. This economy is less sensitive to higher interest rates. And so the Fed is going to have to hike further in order to slow the economy enough and raise the unemployment rate enough.
Ellen, we have to leave it there. Ellen Zentner of Morgan Stanley, thank you. Just want to come to this headline, just to jump in quickly. From Ukraine, only the Ukrainian model with security guarantees will work. Moments ago, the Kremlin mentioned an Austria-Sweden model. They also said the Kremlin said a Ukrainian proposal to become a neutral country but retain its own armed forces, quote, could be viewed as a certain kind of compromise. The response that we got from an advisor to the Ukrainian president, Tom, just moments ago, commenting on those talks, only a Ukrainian model with security guarantees will work.
Well, security guarantees I can go with, but the distance of the Ukrainian model, I would suggest, John, is not only about land that was taken in the perception of Ukraine, but also the land that recently has been taken in the perception of Ukraine. And Lisa mentioned just the horror of the headlines and the images seen overnight, particularly from Mariupol, the Black Sea and such. This is more complex than just headlines across the Bloomberg.
We did have an encouraging line, Lisa, from President Zelensky a little bit earlier this morning, who said Russia's, quote, positions in the negotiations sound more realistic.
Yeah, and that's the reason why perhaps there is something to the rhetoric out of the Kremlin, because you're hearing it also from the Ukrainians. However, I do wonder how we get to some kind of peace when you have the buildup of NATO troops in Eastern Europe, when you have a very changed trust and a very changed outlook for Russia. How do we get them back into the financial system? Do we, if they necessarily create some sort of tenuous peace? I mean, there's so many questions, even about this resolution, even if they both agree to some sort of framework.
Futures are positive this morning, up 1.2% on the S&P, on the Nasdaq up by 1.8%. Crude does roll over on Brent and WTI. WTI 96.10. We're negative there about 1/3%. Tom, all of this still ahead, and addressed by Ukraine's leader to Congress later this morning, 9 a.m. Eastern Time.
Absolutely extraordinary what we're going to see at 9 o'clock. And I just think, John, the moment here, let me bring this up if we can get it up here. I've been working on the look back here. In 1941, and John, this is seared into the memory of my parents. I have the clearest recollection that some 19 days after Pearl Harbor, Winston Churchill showed up in Washington. Everybody should read this. Robert Service, the great Tolstoy biographer, says the only one that could write better than Tolstoy was a gentleman from England who John studied under. It has been proved that pestilences may break out in the old world, which carry their destructive ravages into the new world, from which one they are afoot. The new world cannot escape. The chance is past. It is gone. John, are we there now? That's the question.
It's an address to Congress, Tom. 2 hours and 20 minutes away. Full coverage here on Bloomberg TV and radio from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The Kremlin is hinting at a possible progress in peace talks with Ukraine. A Russian spokesman says that a Ukrainian proposal to become a neutral country but retain its own armed forces could be viewed as a certain kind of compromise. Talks between the two sides are currently underway. Several hours from now, Ukraine's President Volodymyr Zelensky will deliver a virtual address to the U.S. Congress. Now, China denies it knew about the invasion of Ukraine in advance. In the Washington Post, China's ambassador to the U.S. wrote that had Beijing known about Russia's plan, it would have tried its best to prevent it. He said that assertions that China tactically supports the war are disinformation. Now, that slump in oil prices has taken a breather today. New York futures rose after giving up most of the gains following Russia's invasion of Ukraine. There are still concerns that disruption to Russian oil flows will squeeze an already tight market. South Korea says that North Korea's latest missile test appears to have failed failed. That comes days after a report that Kim Jong-un's regime was planning to fire its first ICBM in 5 years. The South Korean military says the missile is presumed to have failed shortly after it was launched. Now, the CEO of Delta Airlines says as far as the travel industry is concerned, the coronavirus crisis is effectively over. Speaking here in London, Ed Bastian said that Delta had the 2 busiest days for sales in its almost 100-year history last week. And he said that the North Atlantic market has been swamped with bookings. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
the crisis is hitting the EU economy just when its expansion was regaining momentum after COVID-19 crisis. Our fundamentals are solid, so we'll be able to withstand this crisis.
Another crisis on top of another crisis. Valdis Dombrovskis there, the Vice President of the EU Commission from New York City this morning. Good morning. Futures up 1.3% on the S&P, on the Nasdaq up by 1.9%. Big lift over in Europe. On the continent, the Frankfurt Stock Exchange, the DAX, the equity benchmark in Frankfurt, Germany, to be more precise, up by 3% so far. This is Russia says a Ukraine proposal to become a neutral country but retain its own armed forces would, quote, be viewed as a certain kind of compromise, Tom. I can't speak for the action on the ground, but the talks seemingly moving in the right direction this morning.
At least moving, or at least there are talks. The complexities are noted here, and including what happens as you pick up pieces in Ukraine. We're nowhere near that point yet. Again, 9 o'clock this morning, the speech of the President of Ukraine to the Congress of the United States. Right now, and I hate to say this, but an old friend, is that we've pulled away from COVID coverage. We've really had the loss of not speaking every day with Amish Adalja, senior scholar at Johns Hopkins Center for Health Security. We get an update, and very much a China update. But Amish, I've got to talk to you, Dr. Adalja, about this odd word, endemic. It seems like countries and cultures and institutions are struggling with something you identified, which is this pandemic has become an endemic moment. What's next in our endemic pandemic?
What's next is trying to develop a system that's sustainable, that will be able to handle COVID-19 the way we handle other respiratory viruses like influenza or RSV. And we don't see hospitals go into crisis because we've got so much immunity in the population and so much access to drugs like Paxlovid and the monoclonal antibodies. And each country is going to struggle to get there because they all have different levels of immunity in the population, different levels of hospital capacity. But that's the ultimate destiny of this virus. But there's always going to be a baseline number of cases, hospitalizations, and even deaths. But it's just not going to have the same ability that it had to put the healthcare system into crisis.
Governor Hochul of New York with details to one digit, 0.1%, I should say, on the state of New York. You know the state of the United States. Do we have any true understanding of the vaccination statistics of China?
What we know is that in China, for example, they have varied vaccination rates. So, for example, in Hong Kong, it's not so high. Other provinces, it might be higher. However, what we do know is that many high-risk individuals there have foregone vaccination. And those are the most important people to be vaccinated if we're to get to endemicity. So in the United States, I think one of the things that's happened here is that we have very high vaccination rates in elderly individuals, those with high-risk conditions, and maybe less so in the other groups. So that's a much more beneficial place to be than to have your high-risk population not vaccinated, and the ones that are vaccinated mostly with the vaccine that isn't as good as the mRNA vaccines, at least when it comes to preventing infection. So I think China has put themselves in a position where they don't have their highest risk population vaccinated, and they have little population immunity because of their COVID-0 policies. And they've got distrust of the population in terms of which vaccine to use. They've badmouthed the mRNA vaccines from the very beginning. And now they're in a situation where they have a more contagious variant, and they're resorting back to those draconian authoritarian lockdowns that they did in the past. But they didn't do anything for all those years that they've been doing this. Why isn't their population vaccinated? Why don't they have hospital capacity?
Dr. Adalja, there have been some reports that Hong Kong, about half of the population has at some point been affected with COVID at this point. Is it as the Omicron variant rampantly spreads through that city? How long would it take before there is enough kind of collective immunity from experiencing the virus that could actually help push them out of this a little faster?
So Omicron goes in these cycles of about 2 months or so. So that's usually what you would do. But if Hong Kong has, for example, lockdown policies, many of those people are not going to get infected, so you're in a rough situation there because you don't have population immunity. Omicron might give you population immunity, but at a major cost, especially if your high-risk populations aren't vaccinated and you have low hospital capacity. So I think they're in a situation of their own doing, and there's not an easy way out of it except for to use targeted public health interventions, looking at activities that spread the infection versus don't, and only targeting those that do, and then encouraging much more vaccination using the American mRNA vaccines, which China has largely shunned.
Amish, you talked about the 2-month rolling kind of trend of Omicron, and we're in the city right now where masks are optional in most places, and you see that kind of trend throughout the United States and in many parts of Europe. How long before we have to start wearing masks again if we get these sort of upticks in new variants?
I think we will get upticks, but whether or not mask policies come back from a government standpoint, I think is questionable. I don't know that that's going to be the case in places where you have high levels of population immunity so that you don't see cases turning into hospitalizations. In the United States, the focus has been much less on cases over the last couple of weeks than on severe cases. So even if we see, for example, a BA2 uptick and a BA2 surge in certain parts of the country, if it's not translating into hospitals worrying about crisis, I think that many public health authorities will be reticent to officially recommend masks. They may recommend them for people in high-risk situations. They may say this is something you should do, but it's not. I don't think it's going to be something that they say you must do because of where we are in terms of taming the virus and disease the milder spectrum.
Amish, it's been too long. I guess that's a good thing overall, but we've missed you. Dr. Amish Adalja there of Johns Hopkins. Thank you, sir, as always. A bit more detail from the European banks, including Intesa Sanpaolo, saying Russia-Ukraine loan exposure, Lisa, is 5.1 billion euros.
How do they even calculate this, though? I mean, what does exposure mean? Is it just simply the road exposure to Russian businesses and Russian individuals, or is it also to companies that do a lot of business with them? Companies very affected by gas prices. I mean, all of the different vagaries that are really playing into the real depressed valuations that we're seeing in European banks.
And he brought a conversation today, of course, Tom, the fact that we have 2 interest payments due on Russian sovereign debt, $117 million worth in dollars.
I am glad you bring this up, John. We really haven't touched on it this morning. What I would look at here is the broad set of affairs, not just those 2 interest payments and rubles, a better ruble for Mr. Putin from 130 down to 100, but nowhere near the 76 of pre-invasion. And I'm sorry, John, whether it's the jokes of oligarchs in boats meeting boats in the Mediterranean or whatever, this seems to have a tangible effect, and maybe it is an action point for Mr. Putin.
Do they try and pay it in local currency? Do they try and pay it at all? What constitutes a default? Fitch Ratings, Lisa, said this. Here's the quote. The payment in local currency of Russia's US dollar Eurobond coupons due on the 16th of March would, if it were to occur, constitute a sovereign default on expiry of the 30-day grace period. So it's 30 days after today, if indeed they try and pay that in local currency.
And I think that it seems like other rating agencies probably would take a similar tact. You raised a question. What if they did pay in dollars, but the payments didn't actually get to the end bondholders because of the sanctions? I mean, there's so many issues with trying to get this payment done.
Well, they're saying they can't pay it because they have been sanctioned, right? Because they can't access their reserves.
Did they ban it also? Didn't they also ban payments of coupons? I mean, pick your poison.
It got so complicated so quickly. Tom, for them, this is not about ability to pay. It's about willingness to pay, or the fact that they can't pay even though they want to. I mean, this is just, it's ridiculous, isn't it?
I think it's what it is. There's great uncertainty here, and it's going to be an eventful day, to say the least. I mean, we've got to get to Thursday. That's the goal.
Futures up 54, the S&P up by 1.26%. From New York, on TV and radio, this is Bloomberg.
Hello traders, how are you doing today? I'm going to place an order to buy Bitcoin. Okay guys, the price I'm looking to buy 40,028. Okay, please place your order. You know what to do. 40,028. It's really close to the actual price. So no time wasters, you got to place an order if you want to trade Bitcoin, okay? 40,028. 28. And let's see what's going to happen. If we'll get filled, it's almost done. And let's see what's going to happen. If you want to get the strategy, you need to go to company.co.uk to get the strategy. Otherwise, you can copy these trades, follow my streaming channel, register for channel on YouTube, on Twitch, on Facebook, on all other different platforms. And you can follow my trades and you can also make a profit. Okay, guys, still, let's see, we still didn't fill yet. What's happened with 40,000, 28? Strange, yeah? Something strange. Something doesn't work, as you can see. It doesn't want place line. We still didn't fill the order. Okay, as soon as it will fill, I will try to find out with our technical support what's happened, why I cannot show you the line. The order placed for 40,028. I'll speak to you later, guys. Stay safe.
The Fed has a job to do. It's risk managing inflation from well above target.
They're trying to fight inflation, and inflation's just gotten worse, seemingly.
The Fed wants growth to slow some. They think it's growing faster than is sustainable, but they don't want to overdo it.
I think it's very reasonable to expect that we could see an acceleration in the Fed's hiking cycle.
The Fed absolutely has to start hiking, if not for any other reason than it needs to maintain some credibility.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
A big day ahead for this market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures at 1.2% on the S&P. What a morning, TK, coming up.
A really full morning, John, and all of it is very serious here. We've got all that going on in China with the Prime Minister of Japan and an extensive press conference now. Very interesting, but that is secondary to what we see this afternoon in the Fed meeting we're going to do, and far more what we will observe and witness this morning at 9 o'clock.
At 9 o'clock with the Ukrainian president addressing Congress, Tom, and this is the Kremlin indicates a Ukrainian proposal to become a neutral country but retain its own armed forces could, quote, be viewed as a certain kind of compromise.
We're pulling out the history here of Austria, Sweden, and other non-NATO EU nations, which is where the Kremlin leans to. And Ukraine, what, John, after 15 minutes comes back with a headline and says, maybe not.
Our way, not Sweden's way, not Austria's way. Lisa, our way.
Yeah, so security guarantees must be the focus of talks and rejects that model. And you do wonder, what is the new model, especially, John, at a time where we cannot just flip the switch and go back to where we were before this invasion. There has been a lot of change and a lot of willingness by NATO forces to encroach further upon the borders of Russia.
So, Lisa, those comments have had this rally this morning, supportive of the equity market drift higher that we've seen in Europe, the US, and China. Can we talk about China? Government departments should, quote, actively introduce policies that benefit markets. Is that verbal intervention or is that verbal intervention?
Or is that real intervention and verbal intervention?
Well, yeah.
I mean, right now we're looking at the plunge protection team in full force after what we saw yesterday, which was basically a free fall. And frankly, when you saw a lot of the comments out of analysts, they were saying no one wants to get in this. You're just going to be catching a falling knife, and this is like 2008. They do not want this kind of instability. My question is, what's next when it comes to fiscal support?
A lift in China, some follow through into Europe, a lift in this market too. Let's whip through it, up 1.2% on the S&P. On the Nasdaq, up 1.8%, a bounce back there. Euro dollar gets back to 110. Crude back to 95, down 0.6% on WTI. Tom Keene, we need to talk about this bond market, don't we? What a change from the last time this Fed met. 216 on 10s.
It's yield lifts. That's a huge, huge thing. But, John, far more than yields lift is curve steepening out to 31 basis points on 2s, 10s. For those of you keeping score at home, the worry, the angst, a flat or inverted curve, we've drifted away from that. That is Powell friendly.
Lisa, your 2-year, 184.
Yeah, just amazing to see how much people have priced in already. Today, ahead of the Fed, this is what we are watching. We've got the February retail sales coming out at 8:30 a.m. And then at 10 a.m., we do have housing data. I am curious of two sides of the same coin. How much inflation can consumers in the United States feel before they start to reduce their purchases? How much do we see gasoline prices near the highest level since 2008 start to crimp that? How much do rents that are surging at the fastest pace on record on the heels of this massive gain in home prices lead to some dampening in consumer sentiment? So far, does not seem to be happening yet, and this is what a lot of people are watching. 9 a.m., Ukrainian President Vladimir Zelensky is addressing both chambers of Congress. A lot of people looking for no-fly zone discussions. How much is he going to ask for this, and how much, frankly, are people going to say, okay, let's go a little bit further? Also, how much does he double down on some kind of negotiating talks that we're hearing about from both the Kremlin as well as from Ukrainian negotiators? And at 2 p.m., of course, is the Fed rate decision, expected to be their first rate hike going.
Okay, traders, as you can see, position opened on Bitcoin at 40,280. You can say it this way, okay? Stay with me, follow my trade, and we will close this trade together. Okay, guys, I'll speak to you later.
Rate hikes. If this is supposed to dampen economic activity, why will that not slow the rate hiking cycle? And if it doesn't dampen economic activity, does the Fed have any control at all over inflation?
That's been the story on repeat over the last 10 years, Lisa. The more this market prices in, the less likely the Fed is able to deliver it, because they ultimately have to back away because of the price action in credit, in equities. Lisa, does that 7.9% CPI print change the game?
How much momentum is there behind that, in addition to just inflation, also growth? And honestly, John, it seems like the market is saying that things can be manageable with 7 rate hikes. We'll see.
Lisa, thank you. Tom, it's that time of the year, isn't it? March Madness.
It is, and it's truncated here. The news flow, John, is extraordinary. You know, I'm going to lean on Seth Davis over at The Athletic. But, John, my color last year was light blue. And this year I'm nudging, I'm not there yet, John, but I think my bracket will have a red tinge off of the gentleman from Texas Tech.
I sound like you talking about football. I just like Gonzaga because I like the name Tom, and the only time I ever hear of Gonzaga is March.
It's like
for the rest of the year, I never hear of that college ever.
That's true.
Sounds like
most
cheese.
importantly, 99 out of 100 Americans don't know where Gonzaga is on the map. Good morning on the Pacific Rim, if you will, of America. But Texas Tech is a cultural thing, John, and you know I go with Seth Davis at The Athletic that. Maybe that's my team to watch.
Have you done your bracket? Have you done your bracket?
I'm in the process of I'm doing it during the show.
My producer Jamie's away this week, so I don't think that bracket is getting completed for me because Tom, I don't do my bracket.
John, here's the way it works in America, and Lisa knows this. Whoever signs a paycheck, that's who wins your bracket. So boiler up, go Purdue. Purdue, I'm all Purdue.
I'm with you, Tom.
All the way.
Just
Purdue,
for management.
Purdue
loyalty.
Looks, you know, we're going to do the show from Harry's Chocolate Shop in West Lafayette if Purdue takes it all.
Team coverage starts right now, Tom.
From Harry's Chocolate Shop.
Not quite. Let's get to Bloomberg's Anne-Marie down in Washington. Maria Tadeo in Brussels. Maria, I want to start with the comments we heard from the Kremlin this morning. Go through them and tell us how important they are.
Well, Jonathan, it's so difficult to decipher where we are at this stage. The Kremlin now saying that there could be an option of neutrality. Remember, this is the buzzword. We've heard this repeatedly for the past 2 weeks. It means Ukraine does not enter a military alliance with NATO, would stay neutral in a case of conflict. But of course, there are many details around it that would be pending. Would they keep an army? Would they have to pledge additional concessions to Russia? Remember, the Russians, they say neutrality could work, but they also also keep using this word, denazify the country. Being a Nazi, by the way, in Russia is a very, very serious insult that really tries to dehumanize the other side of the talks here. But again, it's very difficult to figure out what's going on here because neutrality can mean anything and everything. When you speak to the Ukrainians, they tell you, yeah, that is an option, but it would need very serious security guarantees. And this is not just about Russia. It would be around every neighbor around Ukraine, but also countries like the United States and the European Union would have to agree on it. The one thing I would note, however, is that the two sides over the past 24 hours have made it clear that the positions are becoming more realistic, but also a major reality check for the Ukrainian government, now saying openly, explicitly, NATO is probably not an option for the country.
Maria, I've got 18 questions on the military, on the map, on this war, but let me go to you for a Bloomberg question. Are the sanctions, are the financial pressure, are the most favored nation pull away from Russia, is it working?
Well, when it comes to the European response to that, and it was only announced yesterday, so Tom, essentially we're talking about 24 hours in which the European Union, through the WTO, pulled out the most favored nation status. This is repeating what the United States did last week. But when I speak to European finance ministers, and I had conversations yesterday with the German finance minister, Mr. Lindner, I also had a conversation with Bruno Le Maire, they do say they're working. The pressure is on, and Russia is standing very close to potentially a default. So they do feel the pressure on the economic front is there. But the problem is, Tom, as you know, for the Russian government, this is not an economic story. This is existential. This is about Ukraine and it's about Russia. It's a political story for them in ways that many in the West probably don't even understand. For the Russians, this is not just about an economic crisis. It's a fundamental question about whether or not Ukraine belongs in the Russian Federation. And for the Ukrainians, it's precisely about breaking free from the Russian Federation.
And Maria, just quickly here, how much has this become a politicized issue in Washington, D.C., with some Republicans coming out and saying that the Democrats are not going hard enough, not supplying enough ammunition, not necessarily providing enough support to Ukraine?
I think you'll see a lot of that today when we hear from President Zelensky, because he's really going to implore lawmakers to do more with setting up either a no-fly zone, which, by the way, that has bipartisan support in terms of not doing that. There's a lot of Republicans who agree with the administration. That can be very much so an escalatory response. But when it comes to Polish fighter jets or any sort of jets from a NATO country getting over to Ukraine, many Republicans think this is something that should be delivered, that they should take this advice on from President Zelensky. He knows on the ground what is needed. And you had Senator McConnell yesterday in a speech on the floor, the Senate Minority Leader, talking about the fact that he thinks the administration has been a bit hesitant on this and dragging its feet. So potentially, I think President Zelensky is really going to put the Biden administration in a very difficult place today. And almost immediately after he speaks this morning, President Biden is also going to speak and talk about the military aid the U.S. is sending.
AMH, thank you. With Maria Tadeo on that important conversation. Tom, did we ever find out why facilitating the transfer of MiGs to Ukraine was considered an escalation? Did we ever get a full explanation of that?
John, I don't know. The full explanation is simple, and I thought Greg Valliere captured it perfectly this morning. It's a moment. The emotion we're going to see at 9 o'clock, at 9:20 this morning will be extraordinary, and the adult in the room is at 1600 Pennsylvania Avenue, and he has one thing on his mind, and that is nuclear weapons and the deterrent forces on both sides.
The issue I have now, Lisa, is that once you've established, defined it as an escalation, then ultimately can you go through with it?
Yeah,
but isn't that the problem, right?
Right. It's a self-fulfilling prophecy. How can they now say, okay, we can supply those aircraft, but now it's not an escalation? How do they determine that? And how do they basically frame that to the Kremlin?
It's somewhat self-imposed. Futures up 1.2% on the S&P, on the NASDAQ up by 1.75. Yields on 10s, 216. Your Fed decision just around the corner. This is Bloomberg.
Keeping you up to date with news from around the world. With the First Word News, I'm Laura Wright. The Kremlin is hinting at possible progress in peace talks with Ukraine. A Russian spokesman says that a Ukrainian proposal to become a neutral country but retain its own armed forces could be viewed as a certain kind of compromise. Talks between the two sides are underway. Less than 2 hours from now, Ukraine's President Volodymyr Zelensky will deliver a virtual address to the United States Congress. In China, stocks surged after the government promised to boost financial markets and increase economic growth. Hong Kong's China stock gauge rose the most in 14 years. China is trying to ease investor fears on risks from the property market, overseas listings, and internet companies. Top economic leaders have also said that new loans will grow appropriately. More problems for nickel. The London Metal Exchange halted electronic trading in metal minutes after it restarted. The exchange cited a technical issue with the new daily limit. Nickel had plunged when the market opened after a week-long suspension. Pfizer has asked US regulators to approve a second coronavirus booster shot for senior citizens. It's an attempt to protect vulnerable adults when immunity provided by the first 3 doses decreases. Pfizer and its German partner BioNTech submitted data from Israel, which started giving a 4th vaccine to older people and healthcare workers last year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Inflation.
Highest since 1982.
War.
This is the central banking nightmare because there is no good answer.
Everyone is eyeing the Fed's next move.
We are getting whipsawed.
I think they have to move.
Trust Bloomberg for the fastest coverage and exclusive analysis.
If the market is pricing 50 basis points, the Fed should walk through that door.
Look for massive adjustments.
It's going to be a very delicate task.
Bloomberg Surveillance. The Fed decides. Today on Bloomberg. The fastest way to stay one step ahead.
Presence here sends a signal to the world that we remain united in our support of Ukraine. Our commitment to NATO, our Article 5 commitment is ironclad, and you can expect that, as the President has said a number of times, that we will abide by that commitment.
U.S. Secretary of Defense Lloyd Austin there from New York City this morning. Good morning. Futures up about 1%. We fade just a little bit on the S&P, up 48 on the NASDAQ, up 1.6%. Yields higher by a couple of basis points to 16.16 on 10s going into this Fed decision. And crude, Tom, down 0.4%, just about holding on to 96 on WTI.
Right now, we're going to look at the markets here within this huge, huge news flow that we've got. Again, we're focused on 9 a.m. and the emotion at the Capitol. But right now, we will focus on your new digital world. We're all getting used to it. And what is certain is Anthony Noto, ex-Goldman Sachs and ex-National Football League, has come up with a digital forward strategy. It's SoFi. Their head of investment strategy, Liz Young, joins us right now. Liz, how do you do strategy for a super duper Anthony Noto digital world, different for when you were at BNY Mellon? I mean, I'm absolutely fascinated by how you do true digital iPhone strategy.
Well, it's really just a matter of the platforms that you're giving people information and education on. So it's still providing market commentary. It's still providing insights and making sense of all the movements that happen in the world. You just give it to them in a faster way, and you give it to them on a different platform.
You know, I want to give you rave notices on this, not so much because Liz Young is doing it great, but boy, can I tell you folks, so much of the digital strategy stuff I see is absolute garbage. Enlighten us right now then on what your strategy is to have courage in the equity markets.
Well, I think today is a good day to start having more courage because we finally are approaching the moment that we've been waiting for months. We can get this first Fed meeting where we have liftoff behind us. And a lot of times the anticipation is worse than the actual event. So I think what we heard a couple weeks ago from Jerome Powell was very specific, curiously specific about what he plans to do today. So everybody's expecting 25 basis points. And frankly, we need at least 25 basis points to start tackling this inflation problem. So I think we can start to have a little more confidence. We're going to embark on the hiking cycle, and maybe some of the uncertainty around how quickly that will happen can calm down.
So Liz, you said the bark is worse than the bite, basically, that the lead up can be worse than the actual rate hiking cycle. So then if that's the case, is the Fed basically out of tools? Are they not going to actually be able to reduce inflation enough materially at an ongoing basis to lower that as a threat?
Well, you know what, it's really interesting. One of the things about the market this year that I keep thinking to myself is that actually nobody has an advantage because nobody has seen this type of market environment, or if they have, it was many, many, many years ago. So there are not a lot of current market participants that have seen a hiking cycle with inflation approaching 8%. Now, the tools that the Fed has are rates at this moment, and then eventually the balance sheet runoff. But really what they're trying to affect with rates is demand in the economy. So if you raise rates, hoping that demand will slow down enough to create an equilibrium between demand and supply and let inflation come back down off these hot levels. Now, you don't want demand to slow down too much that it breaks the economy, right? And I know you guys have talked about the yield curve already today. Yes, we've had some steepening in the yield curve, but even 30, 31 basis points between 2s and 10s is a pretty fragile place to be when we embark on a hiking cycle. So the Fed's hands are tied here. They do have to hike in order to tackle inflation, but there isn't a lot of room in the market before they're going to have to look at it and say, we need to either pause, we need to be careful with this so that we don't throw things way too far out of balance on a recessionary side.
So Liz, given the fact that you said that no one really has an edge in this market, what are you advising people to do?
Well, when you look at where the VIX is still elevated around 30, and it's been at 30 persistently for a while, that's not a time when I would tell people sell and lock in losses. This is really a time where you have to be careful. On those rally days, if you feel like you're out of balance in certain sectors or you're overly exposed to things that you wanted to take off the table earlier in the year, you can start to trim on those rally days. But really right now, I think especially through today, we want to get this meeting behind us. And then I think the market dynamics will shift a little bit as we get into the second quarter. And what I mean by that is obviously technology has gotten hit. We've seen the NASDAQ, now it's in a bear market. I think that's a good enough flush for this first hike. You can start thinking about legging back into technology in the second quarter.
Liz, I don't want to get you in the no-do timeout chair, but we're going there. I want to know what Liz Young thinks about arrogant tech companies finally splitting their stock to appease politics in Washington and be just one of the companies versus the brilliance of fractional share purchase through SoFi. Amazon, Google, they're all splitting their stock, but you can buy it off SoFi with fractional shares. What's the big deal?
You can, but you know what? We're still one of the only platforms that offer that opportunity. And that's another thing. When you look at the audience, depending on who the audience is and who the user is for your platform, we knew that it was important to our users to be able to access the stocks that everybody else was accessing. But if you're starting with a smaller dollar amount, it's important to be able to do that in fractional shares. So you're right. That is an opportunity on our platform. I think splitting the stock makes it an opportunity in different ways.
John, she's like marketing head. She nailed that.
I'd expect nothing less, Tom. Liz, thank you. Liz Young of SoFi. Liz, appreciate it. It's been too long. Tom, do you still think this is about the politics down in D.C.? Why is that?
It has been 30 years of West Coast arrogance. I'm not going to know the details, but I had a cocktail party in Boston, John, pushing 40 years ago, 35 years ago. There was a company, John, called Lotus. And Lotus finally got fed up with the East Coast arrogance, so they went out to the West Coast. And there were tax treatment issues as well. And I'm sorry, it has been a distant West Coast arrogance, and now they've got to deal with Washington. So they want to join the Dow Jones Industrial Average just to appease
You think they want to be in the
Dow?
That's what it's about. They want to be in the Dow.
Don't kid yourself. That's part of the mix.
It's just a question.
My good friend Mark Benioff is like Salesforce. Let's join the Dow. Let's just join the Dow. Let's go.
Does Tom know how much he's pushing all your buttons, John? I'm just curious. Is that what's going on?
I'm so calm today.
Are you?
I've had therapy recently. Did some yoga meditation this morning before I came in.
Go yoga?
Hold on. I'm really having trouble with LSU, Iowa State. John, what do I do?
You're doing your bracket, Tom. Just go
I'm
with
doing
LSU.
my bracket during the show.
Just go with LSU.
Go with Arkansas.
No worries.
You know, Seth Davis is saving me at the Athletic.
Did you just call Gonzaga Gorgonzola?
Gorgonzola.
Lisa.
Did you call that Lisa?
Bramo.
Sorry. Look, I don't know anything about this. But I've been trying to fill up a Brock.
Chicago's in there somewhere bouncing a basketball.
If I could do a special with you both later. I do, don't I? Coming up, TV and radio.
Yeah, you get to
Bloomberg Surveillance, the Fed special. We can hardly wait. Futures
Providence,
at 1.2
South Dakota.
on the S&P. Yields up a couple of basis points, 217. I'll run you through the bond market in just a moment. From New York, this is Bloomberg.
Holgate.
any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Can we make a compromise around a neutral Ukraine? That's where Russia-Ukraine talks are right now, and there's a lift in Europe off the back of it, a lift in America too on futures at the moment at 1.2% on the S&P, on the Nasdaq up by 1.8%. There is a bigger lift overnight in China. As we hear from the Chinese government, they will do what they need to do to actively support this market. They've done more than that. Let me tell you that. The Hang Seng, the CSI 300, the Hang Seng up more than 9%, the CSI 300 up 4.32%. Some verbal intervention from them, the right kind of words we're hearing so far.